Good morning, good afternoon, and good evening, everyone. It is April 26th. It is the day before King's Day in the Netherlands. And my name is Tim Stout. I will be guiding you through the price action of today. If I cannot be heard or or you cannot see my screen, let me know in the Discord. I'll keep my left eye on it, or I'll keep my right eye on the price. And let's go over some stuff before we open the market today. Got some earnings, got really nothing new, nothing news on the calendar, or like small things. So yesterday was obviously a nice bear trend day. I'll go over that next, but I just want to start with the bird's eye view, starting with the monthly chart, weekly chart, daily chart, hourly chart, and then on to yesterday. So that's the approach that I typically want to take, starting on the high level. So monthly chart. I told you guys this before. A little bit of a channel, well, the multi-year long channel that we broke out of, set a measured move, and dipped back to the channel line. This is an important, I think, kind of structure or kind of a template that you saw yesterday intraday as well. So what you see here, when price moves in the channel and it breaks out of the channel, it will want to set a measured move based on the width of the channel. So at a minimum, if we break above the channel here, or if you say we break above the channel here, at a minimum, I would look for price to reach the measured move, the width of the channel. When that happens, usually 90% of the cases, I would say, so very usually, it will come back at least to the original channel trend line, set up some type of lower high major trend reversal, or sometimes even a higher high major trend reversal, and then bounce and hit the other side of the channel line. That is what I'm still expecting. So you see that we are coming back to that trend line. We're bouncing from here, and I think we're in some sort of a lower high major trend reversal. We're going to touch that other side of the line. The problem with these lines, of course, is you never know when they will get touched, right? If price goes sideways for forever, it's going to touch it somewhere in 2028 by not even going down. I think it will go down. This was a good breakout below July. This might set up a measured move the size of July and August, so that would be to around 3190. We could have this whole range go for a long time, and then this whole range could break out to the downside to 2700. I think that's a little bit too far, but in a trading range, and this is a trading range from the March low of 2020 to the November-December high of 2021, I think we're going to close the gap here to 3046 eventually. But last month was a bull bar. The month before was a bear bar, bull bar. So what to expect this month? Are we going to go up and actually test the high of September? I think we need to go there again. So that was 42.50. We broke it with 2 ticks in February. I think we need to break it again or touch it again. So 42.50 is a target for either April or May. I think April is going to be the candidate to test up there, and who knows how much further. So that is monthly. Right now we have 4 days left, so it's still a small bar. What is the chance that it's going to remain a small bar? Are we going to use the last couple of days of April to extend the monthly bar, or is it going to be a very small bar like this? If it stays like this, it's actually setting up a low 2. So this was a low 1, it failed. This could be a low 2. It's at the moment also a failed high 2. So high 1, pullback, high 2, and it's also failing to trigger a positive high 2 here. So if anything, on the monthly chart, we're going sideways. On the weekly chart, we went sideways. We're still going sideways pretty much since the end of last year. Bull legs followed by bear legs. You could see this as a little bit of a two-legged move down. I'm still looking at the wrong prices here. Sorry. This is nice. This is nice. Every time I move back into this chart, I'm talking about the price. I'm like, we're not even there. Sorry, guys. We're totally somewhere else. Let's see. Yeah. So this looks better. So we had our legs down and our legs up. Basically, still breaking stops from bulls and stops from bears. So sideways price action in here, but the range is getting narrower. The volatility is decreasing a little bit, and also the day ranges are getting smaller. So at this high here, you saw that from April 5, we've been in a very narrow range. The daily ranges decreased significantly, got smaller and smaller, until yesterday when we finally had a big bear breakout. There's gaps below. I know that the gap here on the high of March 28, we haven't kept a single gap open since, I think, well, since here. So since about August 2022, we closed all of the gaps that are on the daily chart. And so I think the gap to the March 28 high is going to close as well. We had a little bit of a wedge pullback, and that exploded to the upside instead of expected to the downside. It exploded to the upside. We broke this high, we broke that high almost, but bulls were failing to get continuation in here. You saw the market closing the days on their highs, but where's the follow through, right? So it's very bad follow through. Yesterday, we broke this trading range. We broke the attempts of a wedge for the bulls, and we closed almost at the low. And so we're right back close to the high of March 22, and then close to the high of March 28. On the 16-minute chart, so we had our little parabolic wedge down yesterday. Market tried to close within 41.10.25, failed to do that. And so overnight, we had a little bit of lower price action. We had a nice little session on the DAX this morning for the European colleagues that trade that one. We went nicely down exactly to a measured move on the tick, and then reversed up from there. And the Globex chart followed that a little bit. So with good imagination, you can see leg one up, leg two down. So two-legged correction, but really much sideways from around 40.90 area to 41.16 area. Okay, so that could set up a measured move range as the overnight range. That to the downside could be 40.60. That to the upside could be 41.43. Okay. On a broader structure on the 60-minute chart, we've already been in a bear trend for a week. If you see the higher low here on April 14, we set a new high. So on April 18, this became a major higher low, and we broke it on April 20. Okay, so this low 41.38, this low 41.37. So we broke it with a point, and basically we now have a new low. On April 24, we hit 41.35, and so we had a new low. Then on April 24, we had a new lower low. So as from here, we're actually making lower lows and lower highs. So this bear trend is already a week old. And so yesterday we broke again below that trend line and collapsed down. Okay? So this was a little bit of a channel, if you want, and then we have a measured move down the size of that channel. Okay? But what did I say about measured moves down from a channel? They'll often reverse up and touch the other line of the channel, but at least they'll come down to this trend channel line. So I'm expecting a little bit of a bounce, perhaps, and then maybe even the touch of the other side of the channel before further down. Overnight price action not particularly large, so could be that we're testing the low and the high at the open. Let's see here. So on the overnight price action, this is all overnight price action. Fairly small range with a little bit of a dip here around 7 o'clock. And we're now trading at 40104. Good. So let's look at yesterday. So yesterday opened below. So if you see, what is it? Monday as a trading range, right? Which was a trading range day. Then this was the low of that range, and we opened below the low of the range of Monday, and we went directly back in. So this was a failed breakout below yesterday's low. It set up a long, but it didn't have good follow through on bar 2. It didn't have really good follow through on bar 3, and bar 4 set up a second attempt to fail the breakout for a successful breakout below Monday's low, but it had bad follow through as well. If you were a bull buying the one close, you did that on the assumption that this was a trading range that we would fail and that we would probably get a 50% pullback from yesterday's close. So you would want to see price move to 4150 area, 4152 area. And so when that failed, you probably want to scale in and get out break even. So if you bought here the one close and you bought more above 6, so that would be here, you would want to get out break even, and bar 7 gave you a break even exit. If you bought the close of 3, thinking that we have some continuation, you would do the same thing. You would scale in at above 6 to avoid a loss, and you would get exactly out break even. Okay? So bar 7 was purely a bar for the bulls to get out. Bulls that bought here, bulls that bought here, bulls that bought here. They all got trapped. They bought more above 6, and now they're all out. Okay, so you have your bear breakout. You have your inside bar, which is not good. Inside bar in the trading range at this level. It's probably temporary end of the selling. Attempt at a double bottom. Traders are ready to go short one tick below this double bottom. Right? You love this pullback as a bear because this pullback is soon going to end. You have a double bottom. All of the bulls will exit below that double bottom. One tick below, you go short. So you go short on this bar, and immediately this rides down. Right? So 2 times actual risk, you already have it on the low of bar 9, but you can hold wanting at least a measured move of this range or even a measured move of that range. Okay? And so you can take partial profits at the low of 9 for 2 times actual risk, and then hold and swing the remainder there. 10 was again an inside bar, so disappointing follow through on for the bears. At this point, the bears know that the chances of a collapse and a bear trend from here are limited because their breakout is followed by an inside bar. Their second breakout is followed by an inside bar. Their third breakout on 13 is followed by a bull bar. Okay? So what you can see here is actually a wedge in a trading range. Okay, wedge, push 1 bar 4, push 2 bar 9, push 3 bar 13, sort of a wedge shape. And so you're thinking that this could be the low of the day. And then we're gonna reverse up and close all of the gaps here to yesterday's close. That triggers nicely. The stop of the bears, I think, is here. So what you want to see is a measured move from the 14 low to the 13 high. That comes to there. Traders take profits there. Bulls are out, bears take over, and they push the market down. At this point, I'm thinking 23, 24, 25, this wedge is failing. And so I'm looking for a measured move the size of the wedge downward to 4102 area. Bulls made their money back, so any bull that bought in here bought more above 14, got out. So bulls made money buying that wedge bottom. Bears made money selling the double bottom here 5, 6, selling below 10, 11, even selling below 13, maybe selling more above 13 and getting out break even. Arguably, the best sell was below 23 or below 24 when it broke below 20. Okay? You have this whole range here from 23 to the low of 20, as soon as that fails, you're looking for a measured move, at least to 41.20. So selling below 23 to be seen as 3 legs up to the moving average, a breakout 23, possibly going below the bull stop here at 20. So as soon as these bulls give up, bulls and buying anywhere in here will have their stop below 20. So as soon as we go one tick below 20, you know that all of the bulls will give up and that we're going down at least a measured move and probably more. Buying anywhere in here is you're in a tight bear channel, you're in the bear breakout, you have measured moves below, you don't have anything that looks bullish or that is going to break the bear stop. So if you go long anywhere here, 26 to 44, that is an extremely bad idea for even a scalp, right? You can't even get limit orders in 5 points. So going long for a swing, buying above a bull bar here is an extremely bad idea. Then collapse 44, 45, 46. This is a second breakout, but now below sort of a bear channel. If you draw it here, your bear spike, bear channel, breakout below the bear channel. So you're expecting some sort of major trend reversal back into the line of that channel. But there was also a broader channel. So there was a channel that roughly went from here to here. And if we draw the channel line, that was roughly from here to here. So you can see how 46 broke below that channel. And then again, you're looking for a measured move. The size of the channel, and that gave roughly 40.95, 40.96. I gave the 40.96 because I think it's the safest target. You can see it like here, you can see it like here. But that 40.96, 40.95 area was my bear target for the low of the day. And then I would expect a test of the channel line, as I mentioned, back to the other side of the channel. So it falls below the channel, it sets them as it moves the size of the channel, and it forms some sort of a trend reversal back to the other side of the channel. That is how climactic ends of a trend very often happen. What are you doing here? If anything, you'll keep that measured move in mind, and you're selling below prices where bulls give up, right? So anyone who bought the 48 close will have their stop below 48 or will have their stop below 46. So I sell exactly where they got out and then look for a measured move. So that 48 fill is going to get a target there. Here, I think arguably this was the first time, 54, where we took out a bear stop, right? So none of the stops from the bears were touched, except this one here in the trading range. But all of these stops from the bears kept intact. And then on this leg down, I think here above 53, if you see this on the 1 minute chart, 52, 53, this is a two-legged move, right? So on the 1 minute chart, bears will have their stop exactly there. At that point, you can see 54 broke above it and effectively ended the bear trend that was going on since bar 23. And so at this point, I'm concluding, this is for me not a point to buy, but I'm concluding that we're not longer in a bear trend, that we're in a trading range. It also makes sense that this could be a final flag. I'm still expecting that measured move 40.96 to be reached. But I am selling high and I'm not selling low. So you can see here that all of the gaps were closed. There's a gap here to the 59 high that got closed. There's a gap here to the 62 low that got closed on 64. And so here we're going sideways. We're closing all of these gaps. And then you have 73, the final flag, 76, an inside bar at the measured move targets. This is where probably the bear trend is going to end. And we're going to find our way up to the other side of the channel. So strong bear trend, difficult sometimes to make the switch after so many trading range days. But once you see 23, 24, 25, these are not trading range type of bars. This is a spike, right? There's no tails here other than this. There's definitely something different in 23, 24, 25, and 44, 45, 46 than you've seen in the trading range legs here. Okay? So look at this leg, look at this leg, not 3 bars, but just 2, 3 bars and immediate reversal. Look at this leg. It's totally different than the spike from yesterday. So you have to get, at some point, I think I joined Tim F's session yesterday. I think he said somewhere, at some point you got to sell, right? And I think that was the best quote of the day. You have to sell in a bear trend. You have to recognize that this is a bear trend and stop looking for reversals. Anyone that says, I see a wedge bottom, measured move here, measured move there, it's still a bear trend and it will continue longer than you think is rational. So if you found yourself selling here between or going long between 26 and 44, you really got to work on psychology of bear trends and psychology of trends, because they will go on longer than you think. And so we are at 40.99 right now. So we're gonna be opening close to yesterday's low. This was a trading range, so it's now roughly a trading range between here and here. We can see at the open what we're gonna do. This could set up a measured move down or a measured move up. I'm expecting maybe a trading range open before we decide anything on up or down. There was something else here. So if you saw yesterday, the Monday as the trading range and then the successful breakout, I'm always looking at a measured move the size of that day's range that pointed us to 41.1375, which became the measuring gap ultimately of the bear trend. So difficult maybe after all of these days of sideways trading range price action to discover the bear trend, but that was imminent if you looked at the daily chart, especially with those small sideways bars here. Another thing I wanted to mention is about average daily range. So the average daily range lately has been compressed very much if you compare it to about January, February, March. Like the ranges here were big, 50, 60, 70 points a day. The ranges here were very small, right? On average, about 30 points a day, intraday. And that means that you have to adjust your goals and your targets. As Al says, 40% of an average range is about a swing, and a quarter of that is about a scalp. So that means if the range drops back to 30 points a day, that your scalp size is actually, or that your swing size is actually dropping from 20 points back to 12 points, and that your scalps are dropping from 5 points to 3 points. If you take that knowledge and you look at the intraday charts, it was much easier to find good swing entries. So here below 13, that was 41.59 minus 12 is 47. So you come about here for a swing. Buying above 34 is 41.44. That will be 41.56. So that's about here for a swing, right? So if you keep monitoring the average daily ranges and modify your swing targets and your scalp targets according to what the range tells you it is, you can find maybe better swing and better entries. I've seen a lot of people like, where's the 20-point swing? Where's the 20-point swing? Well, on 30-point days, the 20-point swing is a 12-point swing, right? You got to adjust for volatility. Volatility and ATR, good to use, but you got to also understand that ATR is being built by trading range days and trend days. And so trading range days will typically stay under the ATR, and a trend day will typically go over the ATR, and that is how the ATR gets calculated. So you always need to remember that if ATR is 50, that a trading range day can easily stay 30, and that if the ATR is 50, that the trend day can easily do 100 points. Okay, so never assume that a trend is going to reverse just because you're at the daily range. That is a foolish thing to do. A trend can go on for 600 points or 700 points until some circuit breaker stops the market, and then after that we can go down even further. So don't use ATR as a guideline for judging a reversal, but use it to take scalp and swing targets. All right, so got 4 minutes left before the open. Let's see on the ETH where we're at. So a little bit of a bear channel here. We've got a bear breakout failed. If this is the bear stop, we're now above it. If this is the bull stop, we're now below it. So we are effectively in a triangle right before the open, and we're expected to open around 4,100. On the 60-minute chart, I'll keep that channel in there that I had there. We are in a little bit of an empty space right now. So 40.99 was last tested here in this area. And so we're at the beginning of April. We're at the lows of April. And so April could become a good bear bar. We have how many days left? Just 3 to conclude the monthly bar. Yep, saying that right. We got today, Thursday, and Friday to build the monthly bar. That's still a small monthly bar. In addition, basically, anyone who lost money on the open lately, you got to remind yourself that, as I explained last time, a lot of the opening ranges have been very small. The breakouts have come later in the day, around bar 12, 10, 8. And so usually if you see last couple of weeks opens, it has been a good idea to wait for about 6 to 8 bars before placing a trade, because the open typically sets a narrow range lately. Some of us might have been spoiled by January or February when there were so many trends from the open. But in general, it pays out to wait a little bit. And so if you have been losing money at the open, promise yourself to sit on your hands for about 6 bars. Everything will come clear in about 10 bars or so at the open. Okay. And then there's still 70 bars to enter and to exit before the day closes. Yeah, so I'm using this workspace only when I'm in the trading room, so it never gets updated really. And that's why it's sometimes still on the old contract. Sorry about that, guys. I mentioned yesterday as well that I was seeing a fight between bulls and bears for the 41.10 close, and I mentioned that because here on the daily chart we had that. On the daily chart here we had the big bear bar, or the big bull bar with a low at 41.10, and I was trying to see if we were trying to close below that or not. So I was curious to see if the breakout below that was going to fail or not. Bulls tried to get back to the 41.10. They failed, and so it was a mini success for the bears, closing below 41.10. And we're going to open with a little bit of a gap down. So market is open right in the middle of the trading range. Okay, so first thing I see is not a bull trend, not a bear trend, because we're opening right in the middle of the trading range. If this is the trading range, so let's say it's 41.09 high. Is that 41.09 high? No, that is it. This and 49.150 low. Then basically we're in the heart of that trading range from yesterday. Let me open the chart with the numbers. So right in the middle of that range. There's a gap here to yesterday's 78 high. I think we're going to close it. We closed the gap to the 80 low. There's another gap here to the 43 low. At the moment, if I have to choose, I'm bearish just because of the gap down. Okay, so this is a pullback from the gap down from yesterday's close, and it's about a 50% pullback right now. Market will have to tell me then obviously what it's going to do. I'm already thinking everybody who bought the bar 79 from yesterday, they might get disappointed when we dip below it, right? So if we dip below the size of that bar, that's 40.76. If we dip below the close of the bar in that low, that's 40.7875. Let me also put in the high and low from Globex. What is that? 89.25. Yep, there we go. That's 89.25, and that is 41.16.25. There you go. All right, so 50% pullback coming down. Nothing to do at this point. We're in the trading range, and we're in the middle of the trading range. Yesterday was about a 50-point range, and so I'm looking at 50 points. That would be 40.60 to the downside. It would be roughly to above yesterday's high from to the upside. I think we're going to go lower just because of the bearishness and the follow through. If you look at the daily chart and you have a big bear bar like this, we didn't go below it here, but we got below it almost on every time we had a big bear bar on the high of a trading range. Okay, so chances are higher that we go below it than that we go above it if you look at yesterday's range. Yesterday it was also important because it broke below the higher low that the bulls had, right? So if you see this whole trend up, higher low, higher low. So here, the higher low of the bulls is now here. Then we get this new leg up, and we get this new leg up. So the higher low of the bulls is now there. And then if you see this pullback, the higher low is there. So we broke several higher lows from the bulls. And so effectively, we're not in a bull trend anymore that we started in March 13. We are either in a trading range or in a bear trend. I'm thinking with the gaps here below that we at least need to test the high of March 22. So that's 40.70. And we might come all the way down and close the gap to 4,000. So the 4,000 is a famous number. It has been mentioned all the time. Market is swarming around it. But in doing so, it reduces the volatility. So if you're an option seller or an option buyer, the reduced volatility can be good or bad for you, but it was to be expected after the volatility was so high that we would come down to a low. I think that the VIX hit a very much low last week or the week before. So security is cheap, if you look at it that way. It's going to go a little bit higher. Well, it already went a little bit higher with yesterday's bear bar, but you might expect some more bearishness. Okay, so bar one, small bar, 50% pullback from yesterday's range, 50% pullback from that range, inside bar 80, so that was probably having buyers below. There are probably sellers below bar one, but they'll be scalping since we're in the trading range. They want to see the gap to 78 high being closed, and they want a breakout 1 or 2 times the size of bar one. So that would be to 92.25 and 86.25. Bears below bar one know that we're in the trading range, so they're willing to sell below bar one. They're willing to sell above bar one, and they're willing to sell even a measured move up to get out break even. Right? And they know how to exactly do that. So a measured move up would be to 41.11. 2 times a measured move up would be to about 17.75. Bears would scale in higher here and get out break even. Moving average is flat, or is going to be flat if we stay here for a long time. Nothing to do here. Flat is the only right thing to do. It's already paying worthwhile, of course, to drag or to paint the measured moves from this trading range, because today we're going to break out of this range. We can break out to the upside and to the downside. We can break out only to the upside, and we can break out only to the downside. So if I draw the size of the trading range right now, I just want to have that line in case we get like a sudden breakout. So this is measured move 1. And then to the upside, it would be 41.28, 1. And then to the upside, it would be 41.28. And I'll adjust these ranges if we break out, fail, or if we break out and fail. Now, 80% of breakouts fail in the trading range. but they are most likely to be successful on the open of the next day. So this tiny range, it could be that an opening bar will break out successfully. There's a higher chance of a successful breakout now than there, for example, was in the last 10 bars of yesterday. And that's just because of the energy of the market and the open. So bears not happy with bar 2. They wanted to sell and they wanted to see the market plunge down. Instead it reverses up, but it doesn't come above 1. Bears will sell more above 1, trying to get out break even. Right now, they still want this market to come down. They sold 40.98. And they're still trying to close the gap to the 78 high, and then they want the 79 low to fail and set a magic move down. It's important to realize that this is, in essence, still a tight trading range, so not a lot of stop entries. Stop entries were scary with not bull bars closing at their highs, not really bear bars closing on their lows at the top of the trading range, but they're all closing at the low of the trading range. So if we stay in this tight trading range for a while, it could be that there will be a very limited amount of stop entries. Okay. What do you do above 2? I would not buy it. We're still in the middle of the trading range. So this is a tight trading range and we're in the middle. This is a larger trading range and we're in the middle. And so I don't buy above. You could sell below thinking that we're going to drop down below yesterday's low, but it's so in the middle that the risk reward is just not good. Right? Ask yourself if you would sell below 2 100 times in a row, and if it would be profitable more than 60 of those 100 times. Right? Probably not. Buying above 2, same thing. We're still in the range of bar 1. We're still below a 50% pullback. So if anything, this looks more bearish to me than bullish. And that is just because bulls did not get anything more than a 50% pullback. So bears that sold below 1, now that we're getting back to almost that point, will they buy back their shorts? Or will they keep them thinking that we're still going to collapse further down? That's what I want to see. So the 40.98, once we get there, I want to see if it hits that, reverses back up, and we take out, for example, the high of today, or are we going to go further down? I still think 78 high is going to be hit. Definitely more bearish than bullish at this moment. The 50-minute chart is saying that we're going to see 97.50 again. Just because it dipped below that bull bar once, it's going to dip below that bull bar twice. So bears are back at the 1 low where they sold. Maybe they sold more at the close of 2, with a little profit. Very hard to do because they don't even get 4 points, right? They got 3 points. Will we now get below 2? Yeah, just got below 2. Close the gap to the 78 high. That's good. Okay, now the bears want more. Yesterday's low. Next target. If you see this as a pullback, what you want to see is that the bear trend continues the size of the pullback. So basically a magic move to 92.25. Let's see what bar 3 is doing and if it actually gets that. If we dip below this hourly bar, the same thing counts for the hourly bars for that 5-minute bar. That would be a pullback bar, and I would see the market coming down the size of that pullback bar and the range. So 725 would be the range there. We'll just pull up the 60-minute chart to show you guys. If this is a bear trend and this is a pullback, when the pullback fails, it looks to set up a measured move down. So the high of this bar is 725. The low of that bull bar, 95. Measured move down. We do it exactly. It's to 40.8275. Okay. Next station is then 40.70.50 for 2 times that range, but 40.82.75 would be the first target. If anything, if we come below it, so 40.95, and we reverse back up, as long as we stay below this bear bar, we're going to hit that number again. So safe to sell somewhere in the upper range, because you know that we're then going to go below 40.95 again. Right now we haven't hit it yet, it's still a double bottom, but one tick more and we're below it. So today you have the delight of a double presentation. I think Rose is going to come after me and correct all of my wrongdoings and tell you guys how it really works. I think we're going to take a little break between, so as soon as I finish, everybody gets a chance to get some drinks and food, and then I think we're going to start at, 1 p.m. Eastern, Rose? So once I sign out, don't leave the trading room. Rose is going to shine her light over the price action for the end of the day. So bar 4 looks to be a 50% pullback of bar 3. Until now it is, right? So it's pulling back from 3. It's allowing anyone who bought the 1 close to get out. Anybody who bought the 2 close and scaled in at the low of 2, what do they need? They need 4,100, and that's what they got as well, right? So they got 1 tick above that. So any bull can be out break even. Bears that sold below 1 can have made profit selling more on bar 2 and get out break even on their first. The bears that sold below 2, they are now in the trade and they will sell more at the high of 3 at a 50% pullback, and then they're still hoping that bar 4 will finish very bearish and below yesterday's low. What they want, if they put their stop above 3, selling 1 tick below 2, where the bulls had their stop and got stopped out, they will want to get to 48.75, 86.75 for a 2 times actual risk reward. So below 3 is a low 1, but it's in the trading range, and low 1s in the trading ranges are not good sells typically. I would be more eager to sell here than to buy here, but we're in such tight trading range that it doesn't make a lot of sense, and it's better to wait for a breakout than anything else. You're certain that if Tim Stout is presenting the trading room that we're going to have like the most boring trading range for the first 2 hours or something, because that is what typically happens, right? So there's a pattern there. Last couple of times that has been the case. Today is no different. You have to have a name of Rose and Tim F to get the nice trends. Okay, so what will bears do if they sold below 2? Well, if they sold below 2, they can sell more at their, instead of putting their stop here, they can actually sell more here and then try to get out break even. Maybe they build up their positions out of sequence, so maybe sell 1 contract here, 2 contracts here, and 3 contracts there, so that they build a reverse pyramid situation. I never do that, but I see that the price action tells me that other people are doing that. So if bears sold 40.97.25, 1 tick below 2, and they're selling more at the 3 high, if we get there, then they would need 40.99.75 to break even. So I'll be looking at that price to see if we get there, and if we don't get there and just reverse up, then I know that the bears are stuck. And they will sell maybe more higher and higher, but for that moment, they're stuck. Market's not all in long, market's not all in short. We're still moving sideways within yesterday's trading range. If we look at the bars in the context of the Globex range, we're even in the middle of that range. We broke below the higher low for the bulls, so we're sort of in a bear trend, but it's more sideways, right? So if anything, just wait. This whole range could easily be broken out of, and so that would lead to 40.70, any gaps here. So I'm looking at micro gaps here. There's one gap here to 41.05. All of the other gaps look to be closed. And so this gap is closed. So the only gap that is open from the Globex range is 41.05. If the bulls can get above the 3 high, I look to see if they can make a measured move to 950, because that is what they then want. They had a good bar 4. Bears will be scared of that, so bears selling below bar 2 will want to get out. And I said they will sell more above 3 and then try to get out at 40.9975, or they will probably get out at the low of 2 if we get there again. This is a high 1, so move up, new high, pull back. You can argue it's a 2-legged pullback and therefore it's a high 2, but whether it's a high 1 or a high 2, the signal bar is bad, the context is bad, and so the probability might be low. So the only thing that could mean is that if it triggers and successful, that the reward is very high, right? So it just triggered by going 1 tick above 4, but you see immediately bear sold it. So still waiting, still the tiniest range of ranges. What are we now? 4102, 4104 high, and 40.95 low. Wow. That's tight. Bulls want to take this higher. Bulls want to close the gap to the 44 low, which is close to Globex high. If they do it, they're either going to do it without me, or I'm going to join them on a pullback. But I'm not going to buy here at the 3 high. Okay, I think it's too much risk of more sideways. We're still making lower lows, in this case equal highs. So technically, in today's range, technically it's a bear trend. With yesterday's context, it's a bull trend, right? Because we made a new high and the low is still intact. And so today's intraday says bear trend, yesterday's close says bullish, and so it's confusing, and therefore it's trading range. So who's happy with bar 5? The bears, right? Because their stop didn't get hit above 3. It's a low 2 entry. The bulls are disappointed 1, disappointed on the follow through of 2, disappointed on 4 close, disappointed on the follow through bar 5. So the bulls are disappointed. The bears are getting happier and happier, especially with the fact that the 3 high stop didn't get hit. The bulls can easily take this over. It's not what I'm saying. I'm not saying put 1,000 contracts short. But I'm saying that if you look at it from both angles, bears are happier than bulls here. Because bears could have sold below 2, they could have sold higher, and they could have made a profit there because we just ticked 1 tick below the low 2, below bar 2 again. And so if you sold below bar 2 here, sold more here, you scaled in, you made money on your first entry, you can even keep your second entry still on, hoping that bar 6 is going to reverse down to the low yesterday's low. The bulls are trying to keep the double bottom on the 60-minute chart intact, 40.95. I think they're going to fail. I think we're going to go lower. But it's going to take some time. Because we're not in a hurry, apparently. And if we're not in a hurry, I'm not in a hurry. There's still a good 70 bars. So good news for the bears. They broke below the bull bar on the hourly chart. Okay. So this could start to reverse down more rapidly now. But there's also buyers on that low because people had bought the close of that bar. People will buy more the low of that bar and get out break even. So the high here is 41.07 to the low 40.95. So that's roughly, what is that? Roughly 6 points. So 41.01 break even if you trade that bar. So the longer this trading range lasts, the more explosive you expect the breakout out of that range to be. I see it as bulls and bears just soaking up a position and getting their position larger and larger. And so as soon as it's clear who's winning and who's losing, that breakout can be very violent. And that's often the reason, I think, why a breakout from a range is often just done in one bar. Right? You have no chance to enter on a pullback. Everybody wants that pullback, so nobody is getting it. That's the logic of the market. Because if there would be one, it would not be as strong. And so if a trading range or tight trading range goes on 20 bars, 30 bars, 40 bars, the move out of it is very explosive because people have been adding to their position lower and lower as a bull, and they've been adding to their position higher and higher as bears. And so when one of them has to cave in, it's going very rapidly. This is still small though. This is not one of those ranges. But sometimes you have a bull trend in the first 6 bars, sideways for 60 bars, and then then a breakout up or down at the end of the day. Those breakouts are typically very strong and very violent. They first put you to sleep, right? 70 bars sideways, and then bang, up or down. So bar 6 is closing. If bar 6 is closing, we have a closed bar on the hourly chart on the ETH. So bar 12 closes an hourly bar on the RTH chart, but bar 6 closes an hourly bar on the ETH chart. Now, I said we'll dip below that bull bar 40.95. We're going to dip below it again. Right? The bears are not happy with the breakout, and so the ones that sold there sell more, and they will get out or stay in. Depends on if we're going to break out. But there's an 80% chance we're going to see that 40.90, 4.75 again within the next hour. Right? So within this hour. If you look at it in summary, today is still a bear trend. With yesterday, it's still a higher low from this bar. Oh, I keep forgetting that I need to have this tab. I think we're going to go below yesterday's bar 79. It's setting up bearish. We're not making higher highs, higher lows. We are making lower lows and lower highs, or at least equal highs. So it's slightly more bearish than bullish. But one bar, and that bias is out the window, and I am bullish, right? One of the things is to never have a firm belief. Like if one of the elements changes, you have to be switching from bearish to bullish immediately. And if that means that the trade that you're in is no longer valid, you just close that immediately in a microsecond. Don't worry about it, right? And so if you're in here and you were thinking trading range or whatever, you see this, you have to press the button close, or no, you should have your stop really, but you can't be short, or you can't be long in all of this. Right? As soon as you step away and look at the chart again, you realize, I'm definitely wrong. Like you can't hope for break even. You're not going to get it. So if you're buying in here and you're looking at it and like, darn, I'm buying in a bear trend. You just need to exit at the market. Okay? Don't hope, because hope is not a strategy. Right? So the only way that the bulls can neutralize this mini bear trend is to break the lower high. The lower high is currently here. Right? It's also a ledge, right? Three tops at the same price level. So bar 1, 50% pullback, ended down. Bar 2 went below bar 1, reversed up. Bar 3 went below bar 2, kept equal highs. And bar 6 made a new lower low. So we have lower lows and equal highs, or lower lows and lower highs, if you consider equal as lower. If we get a breakout, I will totally use the whole range of today, so 1 to 6, as the measured move up and down. I'm actually more looking at this whole range up and down. If you take this trend line that we touched on the close, you can just propel that line to the other side and think that this could be a line here. And if you then think that we could even get a measured move breakout of that line again, we could even go to 40-60 area. Okay. And so bar 6 closed. That was the hourly bar. So we have one pullback. 2 on the hourly chart. We have a failed breakout below yesterday's low. That was 91.25. But that was only touched one time. So I'm thinking 91.25. I think we're going to see it another time. We had a failed breakout below the previous hour, which was 40.95. If we don't hit the high here, 41.07, I think we're going to see that 40.95 again. And if I take a measured move based on the side of that range, and I already said we're going to go to 40.8275. So for the bulls, their mission is to break 41.0725, the high of the last hour, and then bears only need a 50% pullback to get out break even, and the bulls can take over. The bears really need a stronger bear bar than this, because this was disappointing. As a result, we are still flat. There's somebody in the chat saying, isn't bar 6 a good reversal bar? Look at bar 6. It's got the shape of a reversal bar, but look at the contact. What is it reversing, right? You need a reversal bar needs to reverse something. Well, it's not reversing any of the closes from the past few bars. And so bar 6 is nothing but, if you actually look at the closes here, okay? So just imagine that this is not a bar chart, but a line chart. I can actually make it a line chart, I think, I'm going to get in deep trouble then. See, okay. If you make it a line chart, these closes are horizontal, right? Like this close, this close, this close, and this close, and this close. There's nothing that's being reversed here. A reversal bar is something that goes all the way through a new range and doesn't accept that range and comes back and then starts a reversal. And so here, bar 6 is a typical trap where a beginner thinks this is a reversal bar, but nothing is being reversed. If anything, the range is kept intact, and it's a failed breakout here, but it's not a successful breakout anywhere else. So see this as a pullback and try to see if on the sell-off we can actually dip below it and treat it as a measured move down. Okay. Nothing is being reversed here. Same here, 48. That's not a reversal bar. I'm looking for a good reversal bar. 34, maybe. You would like it to go lower, maybe, or like textbook reversal bar. 10 is 16 here. That's a nice textbook reversal bar. Clearly doesn't go below the low of the day, doesn't accept it. There's still plenty of room. It doesn't close within this range. If it would close here, it would not be a nice reversal bar. Understand what you're doing, but context is more important than a pattern or a setup. Okay. We're still in a bear trend, trending lower. We're now going to break, hopefully, the 79 low. I said we're going to go back to the 40.9475, right? So that's where we went. You sold this hourly bar below it. You got disappointed. You sold more at the close. You can get out break even. The bulls are now trying to set up a double bottom. Right? So if the bulls are trying to set up a double bottom and it fails, what do? Well, you sell one tick below the double bottom because you know that the bulls are going to get out there. But they still need to trigger the double bottom with like a nice bull bar and then get trapped as soon as the double bottom fails. Question in the chat on yesterday, how do you see why is bar 54 the sign that the trading range is starting? Because it takes out lower high, okay? So let us do some microscopical analysis here. So bear trend, right? Let that be clear. So bear trend, new low, stop is there. New low, stop is here. But if you look at this on a 1 minute chart, so 52 and 53 on a 1 minute chart, right? This is down, this is up, 50% pullback and down. So after this new down, that pullback here, the 53 low becomes a lower high, okay? And 10-second traders and 1 minute traders will put their stop there. And so 54 takes out that high. right? It takes out a bear stop. And by definition, on that time frame, there is no bear trend anymore. By definition, because we took out a higher low, a lower high, sorry. So by definition, with the context as well here of the breakout below this bear trend and then below the lower bear trend, I'm thinking that we're still going to go down, but it's going to be in a trading range fashion. And so I won't buy above here, but I will scalp out of shorts at new lows, and I will only want to sell higher. And then I'm counting on gaps to be closed. So the gap to the 59 high, the gap to the 71 low, the gap to the 73 low. I'm expecting all of those to be closed. So that's how I look at it. It was actually already, I think here, so 50 already went above 49. So on a small scale, it was there as well. So if I put a vertical line here, so this is the time where that happened. And so if you actually zoom in on the 1 minute chart, it happened here. You can see that this was a higher low on the 1 minute chart, right? So leg 1, leg 2, and when we got above it, we reversed down. But from here, this was a trading range. This was all a trading range. So I read lower time frames when looking at the 5 minute chart. I'm reading both lower time frames and higher time frames. Okay. And so if I read this, then what I'm seeing on the lower time frame is 50% pullback coming down, make new low, equal highs, make a new low. So on the 1 minute chart, 10-second chart, tick chart, this is a bear trend. So the bears broke the double bottom. That is setting up to be a good short. But we need a bear breakout below this range now. And I would like a strong bear breakout, but there's a difference between what I like and what I get, right? It's good to be flat, it's good to be short, not good to be long. But if you're short, you definitely need to be willing to scale in, right? Or to exit very quickly on a reversal. The biggest mistake you can make is go short here, see a big bull bar, and go long then, and see a big bear bar again and go short there. You lose so much in 20 minutes that you'll never have enough time in the day left to make it all back, right? So those are emotional decisions. Those are not sound trading decisions. So you need to have a structured approach to how to deal with this. If you believe that 6 and 8 are a double bottom and the double bottom has failed, you sell one tick below 6 and 8. And then you watch this for 5 minutes, being 2 ticks above, below your entry. But that is what you do. Like you have a failed double bottom, bulls are out. And so who's going to trade when the bulls are out? The bears, right? We're going to sell together with the bulls. Together with the bulls. Okay, so good entry bar, below bar 6 and 8. Market's all in short, sell to close. 3 bear bars, 1 closing on its low. And about to break the 79 low from yesterday, but it's very much still a trading range with a small range. I'm hoping we get to 40.80. These bears from bar 9 will want to see a close, right? So they want to see 40.86 that I already marked here. So 40.86 for them. And they want to see 40.80, which is also around the bear trend line. Bulls will, of course, want to see buyers below yesterday's low, right? Their bet is that in a trading range on the daily chart, there's going to be more buyers below a big bear bar than sellers, right? We're at that range. We're below yesterday's low. So they're hoping for something like this, right? Big bear breakout, bulls taking over and totally reversing yesterday. I think it makes more sense that we're going to do something like this. So something of a bear bar today. So big bear bar and decent bear follow through. We're definitely not going to close on the low today as yesterday. Those chances in the trading range of having two bear bars close on their low and be big, that is a very slim chance. There's actually a higher chance that we're going to close within yesterday's range. But right now, we're still moving south. Globex low, it was at 40.8925, so we're there. And now the 40.8625 is next. On the 50-minute chart, the bears are hoping that this whole up-down is going to break out into a measured move down. We got a good argument for that. That will bring us to 40.71. The 40.70 area is going to be important later today, because it also has the measured move of the range from yesterday. Probability was with the bears, right? I mean, this is a bear trend, and it's a trading range in a bear trend. And so where's the probability of the breakout of the trading range in the bear trend? It's to the downside, okay? Because this is continuation, or it's maybe 10 bars sideways to down on, sideways to up on the 50-minute chart. And so it's more to be expecting continuation down than a reversal up. Okay, so I got 40.8625. I want a little more, and I'm going to look at this range to 40.7375 and then 40.70. Okay. So double bottom failed. That means that range is going to be a measured move, and so that is 40.8475 minimum. It would actually make more sense that we're going to do that 2 times, so that's 40.75, right? Measured moves are lining up in this 40.70 area. That indicates to me that we're going to find that area. I think bar 79 has failed after trying to, like everybody that bought this 79 close were hoping that we're going to go to the 41.17, and we didn't, okay? So what they'll do is they'll buy more at the low, and they'll buy more a measured move down. So measured move down from the close is to 40.78. Measured move of that whole range is to 40.73. Measured move from the whole trading range was also 40.73. But just get more indications that we're going there than to, for example, yesterday's 44 low. Okay. They're almost at the bear trend line. But that was only here, so it's not a strong trend line. It's more of a channel line that's being respected than the trend line itself. So if 9 is the nicest looking bear bar that triggers a swing, we can take a 12 points low from that low and say 40.80. We can take a 20 points low from that low and say 40.72. Okay. So 40.80 would be 12 points below bar 9. 40.72 would be 12 points below the best looking sell signal bar 9. There's something else that's important, which I see in the comments as well, is that targets being reached. So if targets are being reached on, in this case, of a bear trend, so let's say our measured move is going to get hit, right? Then people are like, oh, fantastic, like the bears have had their target, I'm going along there. That is a fatal mistake, okay? When we're saying that bear targets are being reached, we mean possible end of the selling. Yesterday, this climax here, when someone, I wasn't in the room, but I could imagine that Brad or Rose has said 47 inside bar, end of selling. Okay, that means end of selling. Okay, end of climactic selling. That doesn't mean start buying. There's a difference between end of selling, which means cover your shorts, and going long. You don't go long in the bear trend, but you might want to take profits at these levels of measured moves and things, etc., and then look to sell again, because from here on there might be a pullback sideways to up. And sideways to up means that if you buy, chances are that you make nothing because it's going sideways, right? And up means maybe 5 points. Like, it's not worth the trouble of going long anywhere in here, because it's in a pause of selling. It's not reversing if we're in a bear trend. Okay? You can't stop an oil tanker with one hand. So you need sideways some sort of break of a lower high, a pullback to relieve the bears, and then a possible bull trend can set up. But in a bear trend like this, there's really only one sell, and that's in this area where the lower high 13 was taken out and we got a measured move up. Right? So this measured move here from the 14 to the 13 high that hit exactly there, that's the only time where I would be buying. For the rest, I didn't buy yesterday, I only sold. Right? So you try to sell more and more and more and build a big position so that by the time that we got to that 40.95 area, that you have sold so many times and scalped out a part and kept a part to swing, that by the time that you're at 40.96, your swing position is huge and at zero risk. Right? That is the pinnacle of trading a bear trend, is to build a higher, bigger and bigger position while staying relatively risk-free. Tom Hugard is definitely the authority on that, right? Okay, bear follow through, 5 bear bars in a row now, 7, 8, 9, 10, and 11. Bars get like 11 really much smaller than 9, but good follow through. I'm thinking that we're going to have at least one R on bar 10, so that's 40.78. I would want to see 40.7325, please. All in short, still sell the close. Even a reversal up here is going to reverse down. Going to set a measured move here on the hourly chart, like I said. We're already there. And it looks like what I said about the 50-minute chart is also playing out. So this whole range up down is going to move down into a measured move. Now we're at the bear trend line, so we could break out of that bear channel to 40.60, but there are bears covering here. There are bulls that want to scalp here, or that believe that we're going to move now to the other side of the channel. I'm not with them. So we're breaking out of this range from yesterday. It was a good breakout, right? So you see, let me take these lines away. If you see this as a range, right, you want to see not a tiny breakout, but one where you can say, yes, that is a breakout, right? The 10 did exactly that and more, right? So it didn't even respect it a little bit. It didn't like go up or whatever. It just closed where it just opened where 9 closed and bang, went south from there. So convincing breakout, good for the bears. And now on to my measured move, please. And give our followers what they want. Let's see here. We got that, right? And so we wanted 2 times risk based on that bar. And that would be 40.70. So that's on the hourly. Let's see on the daily if we're close to the March 22 high. So that's 40.7375. So let's pencil that in here, 40.7375. That's here. Way too high, so that's 40.73.75. So let's pencil that in here, 40.73.75. That's here. That's at the same level as the measured move. Okay. So, okay, what do you do bar 12 if this goes as bullish? Well, it's okay to cover short since we're at targets and a measured move. I would not buy this. I would enjoy a pullback because in a bear trend, a pullback for me sets up a really nice measured move when we go down from it. So if this, for example, would stay where it is, I would sell below 12 and hope that we get at least a measured move, maybe 2 times a measured move based on the whole size of the pullback. Now, if 12 becomes a bar that closes in the neighborhood of yesterday's low, then it's more convincing. But still, this would be a high one in the context of a trading range. So you don't do anything buying above 12 is not a good idea. Right? Selling below 12 is a better idea. Because what you then want is a move to 40.70.750. Right? You can wait for a bear bar below the 12 and then sell below that bear bar. That's much higher probability. But I would not buy above 12. It pays to see if bar 12, if buying the close of bar 12 would give you one-time risk reward. So if I put my stop one tick below bar 12, and I would have one-time risk reward, I would need 88.50, and for 2 times risk reward, I would need 92.25. Now, if I would buy this, if I would buy it as a scalp in a bear trend, I need at least one-time risk reward. If I would buy it as a swing, I need to get at least to there, because I'm assuming then that we're going to close the gap to yesterday's low. So it's okay for, again, it was okay for bears to get out here, or one tick above 12. But I wouldn't buy above 12 on a high one. High one in a trading range is bad. High one in a bear trend is bad. So high one, in this case for me, is it's good to see that happen without me. For me, the good thing is if I'm still bearish and this is my pullback, the bigger the range of this pullback is becoming, the bigger the measured move down is becoming. So I don't mind a big pullback because now the size of this pullback is now this. And so that means that my projected measured move down is now 40.74.50. So I actually like fairly large pullbacks in a bear trend. Bull's still hoping that that bear trend line stays intact, right? So they bought the 12 and they have one-time risk reward. They have almost 5 points buying above 12, 85, 25, yeah. So they have their 5 points. They want to close the gap to the 79 low. What happens if you bought so if you're not an intraday trader, but you just like continuous trade, right? So you buy the 79 close because it's a strong bull close. You buy more at the 79 low and now more above here. Well, you are almost break even. Okay? So your first average is the close and the low. So your first average is 97.88. And now you buy 2 times more, and now your average is 40.91.75. So if you have 40.91.75, you're break even as a bull. Obviously, the bears want to keep that gap to yesterday's low open to continue with their bear trend down. Now, there's many people that are a little blind to bear trends. Many people trade bull trends for some reason better than bear trends. And I've mentioned this before, but a thing that can help is actually use a mirror chart. So a mirror chart is placing the price action upside down by multiplying all prices by -1. This works on TradeStation, it works on Ninja Trader. And so a look on this can actually help you see that on this chart, we're in a bull trend, right? Strong bull breakout, but we are above this range. We're trying to set up a measured move based on the whole range here. So that would be 40.72.25. So now pull back to maybe this high, but strong bull trend. So sometimes it helps if you have on a small screen or on a small side screen a mirror chart to verify if you're about to go short, to verify if you have a good setup. But of course, this also works the other way around, right? So mirror chart, if you like to trade bear trends and we're in a bull trend, then using a mirror chart can help you to see your setups in a better way. But I hope that that you can see that on this chart, we're clearly in the bull trend. Like we're clearly made a strong breakout above here, follow through. Yes, it's pulling back, but chances are still that we're either in a trading range and going to come back to, in this case, the low, but that we're not in any type of a bull trend, because you see here that we're on a bull trend on the mirror chart. So strong bull bar 13. I'm not buying above. Bears are hopeful still that we can get to the measured move and that this is a pullback to the breakout point of the trading range. And the bears that held were still below their entry point, right? So if they sold the double bottom 6-8, we're still below their entry point. So they're still at a profit. They'll probably have taken at least partial profits here at the 11 close or at the 12 close or above 12, and then trying to sell again. The bear stop, I think, is above 9. So this was a move down, this was a pullback, and this was a move down. So I'm thinking that the bear stop is currently here, 9. And so what bulls want to do is break the bear stop and set a measured move up to 40.15.25. In reality, if they break the bear stop, then we're probably more going to go sideways and determine if that bull breakout then gets continuation, or that the breakout above that high is false, and then we're going to go back down. So a low one after so much bullishness is probably not a good trade. So selling 14 low, even if it's a bear bar, is probably not going to work. Chances are that you get a little bit of a second leg and then down. Unless 14 is so convincing that you say, well, yeah, that is a good short. But it closes, even if it closes on this low tick, the size of this bar, it's not a good short because of the low one. The ones are in a breakout, strong breakout. You're betting on continuation. High one in a strong bull breakout, you're betting on continuation. But in this context, in the trading range context, it's actually 80% of the time it fails. So the bulls got their 2 times risk reward, so it's more of a trading range now. If you saw this as a little bit of a bear channel, you can also see 10 and 11 as a breakout below the channel and a reversal up to the channel line and to the channel trend line. I'm thinking a little bit more bearish. The hourly bar is setting up nicely. The hourly bar on the RTH chart, so that runs from bar 1 to bar 12, is a nice bear bar, right? So this is the high of that bar, this is the close of that bar, so it's a nice bear bar. It wants to fall below it to see if there are sellers there. So 14 didn't close within yesterday's low, within yesterday's range. Looks like we're gonna go below 14 to see what's there. I wouldn't sell below 14. I would only sell below 12, and so that this whole range fails, I wouldn't sell below 14. You can sell below 14 if you're willing to scale in higher and be able to get out break even. Then it's good. But it's better to wait for 15. And if 15 is strongly bearish and it takes out 14 low and maybe the 13 low, then selling below that bear bar will give you higher probability. Everything in trading is a trade-off between probability and risk reward. So I like to sell like as soon as the pullback fails. Al likes to sell when the pullback fails and it has a bear bar, then he sells below that bear bar. It's exchanging basically probability for risk reward. In this case, this was a low one, so it was probably going to fail, but bears took it anyway. So some bears sold below 14, thinking that bulls would want to get out quickly, and then they'll sell more, for example, above 14 to get out break even. But if you have a systematic way where at least half of your trades are, for example, break even, 40% of your trades are winners, and 10% of your trades are losers, you have a very profitable existence. Right? That is how a lot of bears and bulls trade markets like this. They can safely sell below 14, thinking that this is some sort of a higher low on a mini bull trend, and so that when we go below 14, we are taking everything out. So then all of the bulls will sell out, and all of the bears will start to sell as well. That's how we get lower. But bears doing that have a way to get out break even. Okay. And so it's a good sell if you know what you're doing. It's a better sell if 15 would convince us, if 15 would close somewhere at 40.82 or like a very low, it's a better sell below that bar. And so safer for beginners in that way. You buy above 14, I think it's too high in the developing trading range. It's about a 50% pullback from this whole leg down. So buying above 14, it's a high one after a pullback. I would not do that. You can argue that if this whole thing is a trading range, then what are the chances that the gap to the 8 low are gonna close? Well, that chance is high, but your risk reward is terrible. You have a reward 40.90 to 40.94, so 4 points reward. Selling in a bear trend at a 50% pullback point, and your risk is 10 points. So 4 points profit, 10 points risk for something that's, I don't know, not even 50% likely is a bad trade. What I am interested in is to see this pullback. I still see it as a pullback because we haven't touched the lower high yet. To see that fail and set up a nice measured move to the downside. Okay, but without the signal, I don't have that. So when I'm looking at the 5-minute chart and I'm saying this range I'm looking at that range to see a measured move down. When that fails, that's basically the same here as here on the 50-minute chart, looking at the single bull bar and saying when that range fails, I'm looking at a measured move. And so that is basically the same as looking at the hourly bar here, when I said if we fail below it, the bulls would want to see a measured move down based on the side of that bar. This one bar, or these two bars, are a much bigger range on the 5-minute chart, right? And so what I'm seeing here as this range setting up a measured move is the same as looking here on the 50-minute chart and seeing this one bar and then projecting a measured move down. And that's why I'm looking at those ranges. Okay, so below 14, bears not happy, bulls not happy with the response. Bulls that bought the close of 14 will want to get out, right? And so 49.50, we just touched it, and they're able to get out now. And so if we don't go higher than this tick, which we just did, but if we don't go higher than that tick and reverse down, then you know what happens, right? By the close 12, 13, 14, disappointment on 15, they get out and the market drops. The bulls are still hopeful that they can close the gap to the 6 and 8 lows. Their argument is bear trend, touch of the bear trend line, trading range with a gap to the 8 low. That's the breakout point. As soon as we have a measured move from the breakout point, we go back to the breakout point. And their argument is solid, so they have a good chance. I'm just still convinced by this bear trend and want a little bit more continuation. So that's why I'm not buying. That would all change when we go above 9. If we go above 9, effectively our bear trend is over because then we breached the lower high. Now what I would want to see is a little bit of a new bull move, and that would make the bull stop go below 16. The bull stop is still below 12. If we now make a pullback and a new high, so higher than 14, the bull stop moves into this area, and that means that I can sell into this area when it fails. And now the bull stop is basically below 12. So if you want to sell together with the bulls, you can only sell one tick below 12. But this was a low 1. It failed. This is now setting up a low 2. We're close to the moving average. We're at a 50% pullback. So bears are hoping that they can create a nice convincing little bear bar to close on its low for second chance to sell. So if you sold below bar 14 as a bear and you got disappointed, you can get out break even. That's what I said. Bears know that they can sell this, and they have their tricks to get out break even half the time, to be profitable 40%, and to only lose 10% of the time. So it looks like the bulls are going to be successful closing the gap to the 6 and 8 low. And it's 12 points above 12, so we're at swing target for a 30-point day. Not yet. Not yet? No, it's 97. But the bulls need to break the bar 9 high, okay? If they break the bar 9 high, then they have a good chance of going to 41, 15, 25. If they don't, then it's a higher chance that the bears will take over. With the bulls now having a stop below 16 or below 15, they will take over and try to get the market 2 times that risk down to 40.7625. But you got to be wondering what the chances are of that right now. Yes, bar 13 was strong, but it's really the only bull bar till now that has been strong. Okay, the follow through was there. Bar 16 triggered a nice breakout above 15, and the bears got 2 times actual risk on buying the 16. The bulls got 2 times risk, 2 times actual risk on buying the 16 close or above 15. But they're taking profits there as well. So they're taking it, and they're not confident in holding it to above 9 and then break out to 41.15. So still is, in some way, a 2-legged pullback from the bear leg down. So I'm not buying when we break above 9. If anything, that is then a double top. But if we break above the 9 high, I would be more interested in buying a pullback long than looking to short further. Right now, I'm happy with this bull leg sort of dying out. We left the gap open with a tick, which is not good for the bulls. It's not a micro channel because 15 was a pullback. And we're starting to disappoint the bulls. The bulls will be quick to get out if it's now starting to fail. They'll try and stay into the trade, closing the gap to the 6 and 8 low, break it above 9, but they need to show it now. The moving average is giving resistance. You saw this as a bear channel. We're sort of reaching that high of the channel, And so more and more bulls will start to take profits instead of adding to their positions. It's also the last bar of this hour. And on the hourly chart, there's still much more sideways to down. And we want to try to close higher than 40.95, but still need to see. It's a wedge pullback, or it's a wedge bottom. I can attempt to wedge bottom on this chart, right? This line, 1 push, 2 push, 3 push. And so the bulls will want to take over and get us to 41.25, 41.50 area, but they'll have a hard time. On this chart, there are micro gaps to, I think, this low, 21.75. Yeah, 21.25. So there's a micro gap there that bulls will want to get to. And they've got a good chance if we can break above that lower high. This is a lower high on the hourly chart. If we can break above that, 21.75 becomes a bull target. Okay. Let's put that here, 21.75, that's this range. We need to break above 9 first, and then we'll have plenty of time to enter that on a pullback and then ride that to 41.21.75. So we're not buying above 9, but above 9 makes the market considerably more bullish than it is now. Right? This is still undecided. In a trading range, often you get a measured move breakout the size of that range. So especially on the open, just keep it there. So we got a measured move opening range, first 8 bars. And then what happens in a trading range is typically you go back to that breakout point. So that's why I'm saying the bulls will want to close the gap to the 6 and 8 low. We got exactly the same, I think, today on the German market, where there was a sell-off to exactly that measured move, and then of course a reversal up to the breakout point. So in trading ranges, if there is a measured move breakout and there is a reversal, often it wants to go back to the breakout point. So we just closed the gap to the 6 and 8 low, and we now need to attack the 9 high. It was difficult to buy above the 12 high. I still think that is not a good trade. Buying this area is difficult because you're buying at the 50% pullback point. Market will always make it difficult to buy or to sell, right? So once you're ready to buy, you're already at 50% breakout, at the 50% breakout point. When you're ready to sell, you're already here or here or here, and you're at yesterday's low. So the market will always make it very difficult to do one or the other. Now, if you look at it now, you're going to say, like, yeah, buy above 12 was a buy, but you're selling against all of these bear bars. But yes, we're at a measured move, but we can draw bigger measured moves, and we can go all the way down to 4,000 in one bar, right? So buying above 12 was only possible if you allowed either to scale in lower and have firm belief that we're going to go close the gap to the 6 and 8 low, right? Because then you have absolute risk reward more than 2 times. Or you would exit quickly, or you would scale in and get out break even. So now we're going to close the 9 high, and the way that we're going to break the 9 high is going to tell me if we're going to go to 41.20, 41.21.75, or that we're going to go more sideways. There's only 2 gaps open on today's range. So there's 1 gap open to the 18 high, and there's 1 gap open to the 12 high. A lot of times in trading ranges that reverse, the first gap will stay open, but those subsequent gaps often close. And so the gap to 18 right now is a magnet for bears to actually go and close on a return. Okay. So again, you sold. If you sold, you sold here below 9 or below the double bottom 6 and 8, and then you got your measured move. You were getting out above 12, you were getting out at the measured move, you were getting out 3 points above 12, which is a scalp target, but you exit, right? In any case, if it comes all the way back in so many bars to your entry price, you get out. So double top, this is not enough to make me convinced that we're going to go to 41.2175. And I think we're going to close the gap to the 18 high. But it's important for bulls that we break the lower high. Because without breaking the lower high, it's not a bull trend. It's either a trading range or it's a bear trend. So we need to break that lower high to make it, to give it a chance of being in a bull trend. And then what I would like to do is take 50% pullback longs. I choose. So the good thing about this is you never get trapped. Right? So these pullback moves, and there's never a bear setup that you get lured into. Okay? So the bulls are very smart, and they're not giving the bears a chance to start selling. Their stop never gets hit for the bulls, so the bears can never take over. And this is a lot of times what happens. There was a nice trend the other day. I think it was here. No, somewhere here, where traders were wondering, how can this go all the way up? But the fact is that here, I think it was this day, yeah. So we're in a bear trend. You were selling. Here's a bull stop, for example. Here's a bull stop below 48. Okay, higher low, higher low. So bears sell when that stop caves in, and then you get this run up. And the bulls are smart. It never falls below a higher low. And so here, the first higher low is here, and then you get a pullback, new high. You get a pullback maybe here, new high. You get a pullback and a new high, so the stop is there below 70. Bears are smart, making sure that their stop never gets hit, and then it turns into a bull trend. Right? So originally here you were thinking of selling as soon as the pullback ended, and it's basically a never-ending pullback. And that's the story of today as well. This is a never-ending pullback. It never transformed into a two-legged pullback. It transformed, and bulls took over and actually saw their chance now to break the 9 high. Okay. So what happens now? Well, we only touched it for now. We didn't break above it. We're going to go back and most likely close the gap to the 18 high. But you're now going to be inclined to look at pullbacks and buy them. Unless the bulls take this over and bring us to 41.2175 immediately. But that is unlikely to happen. Bulls are hoping that this is a measuring gap, and that we're going to go to 41.10. But the reality in the trading range is that micro gaps typically close, that buying high is not working, and that as soon as it looks super strong, it typically is the end of the bull leg. Okay. And so I'm looking at this 18 high. So if you're buying 50% pullbacks, what is sort of the range that you should use? Well, I'm thinking that this was a pullback already, so a 50% pullback is sort of from the 18 low to that high. So you're expecting 95.25, 95.50 to be a pullback, and then see if you can get a high 2 to take you further up to a new high of the day. Okay. But this could well be a failed breakout and then take us all the way down. So that is what you need to assess. There's a good chance for 41.2175 and 41.15. I think the 41.15 target was a measured move this range. Yeah. So that is also there, 15.25. I do believe we're going to go there. Our measured move projections are of course now invalid, because instead of breaking out of the trading range, we only extended the range. And where did I say the gap was? Was that the 2175? That was the gap on the hourly, right? Then it's a measured move based on the hourly. So 2175 is a good target, but it's probably going to be Rose who celebrates the run up to the target. Safe to go long with scaling in. Okay, so you know that if we're gonna go above a stop from the bears, that we're gonna go there at least twice. So if you see here, the stop on the 50-minute chart is 4,101.25. Even if we dip below, 90% chance we're going to go to 4,101.25 again. So that is the high of bar 8. We're at the top of the trading range, so I wouldn't buy here. But if you do buy, because it's by the close, then you can still scale in lower and get back to at least 4,101.25. So if we take this whole bear trend as one range, what would a 50% pullback point be the size of that range? That would be 41.12. Okay. Anytime where you see a formation like this, so a big down and a big up, you have to remember that on a higher time frame, this is a reversal bar. Okay. Because you have down and up, so on some higher time frame, this is a reversal bar with one-time risk reward. And so 41.2175 is a target based on the size of this reversal bar. Another strong close 20. So bulls are accelerating, but this is a magnet. Okay, so the fact that these bars are getting bigger is because we're coming closer and closer to the magnet, and the fact that bears have surrendered. Right. So this is a strong breakout above that lower high. So chances are considerable that we're going to hit at least 41.15.25. Still by the close. Big bull bars, at least 3, one closing on its high, this one closing on its high, these ones being big. So by the close, you buy the close, buy the close, buy the close until one doesn't work anymore, and then you sell out on the last bar that was a buy the close bar. So this can, of course, still reverse in the context of a trading range. We're now at the high, so some bulls will start to take profits, or at least partial profits. We're at 2 times risk reward for bar 13. So it's natural that there's going to be some profit taking and a pullback. But I think that with 20 going above 9, that they have confirmed the breakout. So that's to 41.15.25. So count on profit taking for bulls at the high of the day. They need one tick to break to a new high of the day, and then we know that bar 12 is going to stay as the low of the day most likely, right, in the 18 bar range. So how do you get long here? Now on bar 20, well, you're at the high of the day, so you're only going to go long with a part of your position, and you're going to add on pullbacks, or you're just going to wait for a pullback, right? But if you only have one position and you can only go in with one contract or nothing, then I would definitely take a pullback. Even if it never comes, it's better to then miss the trade than to buy at the high of a developing trading range. Because it takes 1 or 2 bars to cancel my prediction that we're going to go to 15.25 and 21.75. Like if there's now a bear bar 10 points tall, then that range is out of the question. And then bulls will scale in, breaking, trying to get out break even. And so if you only can trade one contract, you don't have that power or luxury to scale in and break even. And so you don't buy at this high. Right? You only buy a 50% two-legged pullback. There will always be at least one a day. There's probably 4 or 5 a day, but there's always going to be one a day. So if you are a breakout trader, or if you are a pullback trader, or if you trade a certain setup, well, there's always going to be 1 or 2 a day, and that's all you need. So 21, small bull bar after big bull bars, but it did it now take the high of the day for 25? No, that took the high of the day. There we go. But it was disappointing, 21. I don't think 21 is one that they'll buy the close. 20 is still the last buy the close bar. Let's see if 22 can do the same. This is a micro channel since bar 16. So no bar below a prior bar since 16. So exceptionally strong, although you can see 17, 18 maybe as a pause. The rest is definitely a micro channel, and so very strong. Bulls now want to break the high of this bar, so that's 41.0725. But I think more and more bulls will start to take profits, and going to come down a little bit. Last time that the bulls had a distance above the moving average so far was, look here, bar 57 on the 21st. They've never been above the moving average that far. So about 7, 8 points. How do we get to the 41.1525? If you're looking at this range here, so we had a bear trend, we had a double bottom, and then we had a new burst of selling, okay? And that was the breakout, the measured move, and where bears got their 2 times risk reward, or missed it, where they got their profit. And so if you look at this in micro fashion, it's up, down, up, down, up, down, up or down. I don't know whichever one came first, but after this close, it went up and then down. And so on some lower time frame, the bear stop is here. Okay, so this was one leg. So when that fails, that leg becomes the measurement for the trading range, for the measured move breakup. Okay. So this high to the low of the range becomes the target. Now, I have more confidence in the target if it coincides with targets on other time frames. And so I looked at this one, the hourly chart, where I took the low of that bar. I think this is 2 legs, right? Down on this one, up, and then down on that one. So the high of that bar, 0125. The low of that bar, 81.25, a measured move up is 21.25, so 41.21.25. Then I see that there's a gap there on the hourly chart as well, while this hourly chart is in the trading range. And so I think that gap should close. But the trick is with an hourly chart is that sometimes you don't have enough time in the day to make it there. And then so I have now 2 targets, the 21.25, which is there. And I have this target here that I took from this range, 15.25. And I'm thinking we're going to get there. I'm hoping we're going to get there intraday. I'm definitely thinking we're going to get to 41.50. We're almost at the close of yesterday, so bulls that scaled in, or swing bulls that scaled in, can make money on their second entry and get out on their first entry if they bought 79 or if they bought 81 from yesterday. The 41.15 is not so far away anymore. And so bulls are buying every close that is bullish. I sold below 6 and 8, so one ticket below there. I went out above 12. And I bought my first bid here, 18 and 19. I'm presenting, so I didn't aggressively buy more. I'm ready to get out if we go below 21. But I want 15. No, I want 21. Well, I want 6,000, but probability of that today is 0. Let's see, any questions on the chat here? Why would the bear stop be above 9 and not 8? They started to move down. I think I just explained that, right? That's I think 8 was, yes, outside down, but I think 9 was the new impulse of selling. So on some lower time frame, you can clearly see it. So on the 1 minute chart, you can clearly see that this is still a trading range, right? So this is a trading range. And then we got a measured move the size of the trading range. And then this was the start of the selling. So the lower high was there. So that was 98.25. You got to sort of infer different time frames when you look at the 5-minute chart. You can do that and see that which type of legs are in ranges like this. Gives you a great amount of visibility, because you know that there's a lot of trading on the 1 minute chart by algos and stuff. So if you sort of can infer what's going on the lower time frame, on the 5-minute time frame, you can benefit from that greatly. But there's no need to look at those lower time frames, because it's only confusing and it takes time that you don't have. But if you can infer what's happening here, ranges here, and then the breakout measured move below the double bottom with the stop above 9, then that's going to greatly help you to see things in real time. And so stop above 9 with an entry 1 tick below the double bottom, that gave you more than 2 times risk reward. Even if you went out 1 tick above 12, that still gave you 2 times risk reward. Okay, that's what the bears did. So trying to break out, but also trying to top out. We're not closing above 5 bars anymore. 21 closed within 20, 22 closed within 21, 23 is almost closing within 22. So momentum is definitely fading. You can see it by the bars. Nothing to sell here. It's a bull micro channel. Nothing to sell here. But if you are trading a big position, or you want to get onto a pullback, then probably good to cover, to sell out some longs and then keep the remainder going, hoping that you get a pullback to add more on later. So 23 closed again within 22. More and more bulls will now start to take profits, knowing that the moving average probably needs to be touched. And the good thing about a pullback in a bull trend is that it gives us a new target. But it gives us a nice entry, so we can enter as soon as the pullback ends and get more, basically get better risk reward trades. Right? It's by the close. That is, of course, scary. You're buying the close, your stop is all the way down. You're thinking that you can always get out 80% of the time, 90% of the time you can. So you buy the close, buy the close, buy the close until it doesn't work anymore. And then you sell out the last time you bought the close. But sometimes as a beginner, that's difficult to recognize, like what is buy the close and what is sell the close and what isn't. Well, this was definitely buy the close probably as from 19. 18 was still pull back inside 17, but probably 19 was buy the close. So we broke above 9. Now we want to pull back to the 9 high. Resistance becomes support. And then the bulls want to keep this gap open and call it a measuring gap. So they want to keep the gap between the 18 high and the 20 low open, and then have a measuring gap to 1075. 1075. Bears are hoping that this is the case, that we're going to go to 40.95.25. Yes, a trend line really works on a lower time frame. A trend line works on a 5-second chart. If you look at this here, this from yesterday, look at how nicely that is a trend line. On the 1-minute chart, this is definitely a nice looking bear channel. Okay? So every time it hits that channel line, you sell. Every time it hits the bear trend line, you cover. And so there's definitely a mini trend going on in here, and it's very bearish. On the 5-minute chart, it looks different. But if something works on a monthly chart, that also works on the 5-minute chart, and it also works on the 5-minute chart and on the microsecond chart. How did you measure the gap? So there's gaps between the bar high and the bar low of the following bar. Okay? So here, the 18 high and the 21 low, and the 20 low, there's a gap this size. Okay, 20 low and 18 high. If you look at trading ranges or a small pullback, let me see here. So this is a nice little trading range. Okay, so here you have a gap to the 4 low. Right? As we go lower, you have a gap to the 5 low. Right? Now, when we go in reverse, we're closing all of these gaps. Okay, and then in doing that, we left gaps behind 8, above 9. And then we're starting closing gaps here. So as we come down, we're closing all of these gaps. But as we come down, we leave gaps behind 14 low, 13 low. And so as we come back up, you see that we're closing those gaps, in this case on the 27 high. But in doing that, here, we left that gap open to the 18 high. And so we're coming back down to close it. And so if you're buying above bars, putting your stop break even, you're always getting stopped out. That is what these pullbacks do. In a trading range, on the trading range, they typically almost all of the gaps are getting closed. And so if you're in a swing to the other side, you can hold until those gaps actually close, because that will be the target of bears and bulls. In a developing trend like this, you'll typically see that the first gap stays open, maybe a second gap, but after that, gaps are starting to close. So as the trend loses energy, more and more gaps will close. In this case, this gap, the 12 high to the 15 low, I think that will remain open. This gap, bulls will want to see it as a measuring gap. And so I take it from the low of 12 to the middle of that gap, which they think is a measuring gap, and that's how you get to 1075. Now you can buy, if you're willing to scale in, you can buy above the 24 high, because that's a pullback, and so you're expecting that pullback to end. But what buy the close bulls will do is they will actually exit at the 23 close. So it's both an area for pullback traders to get in, it's an area for buy the close bulls to exit. So that could be a second leg trap for the bulls. So buy the close. As I said, you buy the close for every bar until it doesn't work, 18, 19, 20, even these ones, and then 24 is the first time that you fail. And so you get out at the last time that buy the close worked, and that was the 23 close. Okay, and so what happens is everyone exits. Everyone who bought here, buy the close, they get disappointed for the first time here on bar 24. And they exit at the last time that buy the close worked. Right? That means that the pullback is now on its way. So how far can this pullback go? Well, if we do a 50% pullback, I would look at probably the 18 low. So I'd probably look at 40.99. There's a chance that we go to the 19 high. If it's really strong, the bulls can just take over and run us a measured move up to 21.75, 15, and 13.25. So again, there's nothing to sell here, but there is profit taking. Nothing here makes me bearish. Okay. Yes, it's a strong run up, and so it's a trading range, and so you can say we're high, but this is way too strong to sell against. And with the context in mind, with this gap here, with the target on the 60-minute chart, it's actually higher chance that we'll see 2175. Hopefully today, but otherwise tomorrow. But the 15 is very much within reach, right? It's only 10 points up. And so 24 becomes a measured move to 775 and 4111. We're almost at yesterday's close. See if the bulls can just push on or that we're going to pull back first. Most important thing here is to wanting to sell, right? After this bear leg, you want to sell, but you see that you never got the chance. And so you never get tricked into selling. Right? And now you're into wanting to buy. Okay? You buy close, and then you started that at 19, 40.98 to 450, so you got 6.5 points on buy the close. So again, here on some lower time frame, this is a double bottom, 125 and 125. If you can see this as a spike and this as a mini channel, then you see a double bottom here. So bears would want to break the double bottom and get, again, a measured move here to 40.95.25. Good chance that they will, but this is so strong that the bulls probably not want to give up and give the bears what they want, but probably have buyers ready at the moving average or at the 9 high. If they're really strong, we're not going to even dip below 21 and 24. And then the bulls are going to buy 25 and say double bottom, bull bar, buy the close. And 25 is my 2 times risk reward target. If I put my stop one tick below the double bottom and then buy the close, then I want my target to be 12.25. So this is a double bottom. It's also a second leg trap if it falls below that double bottom for the bulls. Just did. And so you see that nobody gets trapped, right? Bulls are out because they bought the close, and they are out here. You have a double bottom. And the bears are not trapped out yet because they just sold below the double bottom, wanting that gap close here to the 18 high. If we now break to the upside, then the bears are trapped. But right now they're in. Bulls took profits. That is for the bears the signal to start selling. Breaking the double bottom here, same as here, the 6 and 8 double bottom. Now it's the 21. 24 double bottom, and they want to measure move the range that was above double bottom. So that is to, I'm measuring this precisely, 125, yeah, so that is to 95.50. But the bears that sell below this double bottom also have a plan to get out break even. That is difficult to see if you're a beginner, but they have a plan to sell break even. So one of their plans is to sell below the double bottom 21, 24, sell more above 26, trying to get out break even that way, sell more 2 times a measured move up or the first sell signal that they'll get. And in half of the time, at least, they'll be able to get out break even. Now, the day that you either make money or break even on almost all of your trades is the day that you'll become consistently profitable. Because if you have a plan to get out break even, and that works every time you're wrong, and when you're right, you make money, life is good, right? And so I think that's part of the reason why Ron's explained so many times how people get out on a break even trade, or how people can get break even on a losing trade. Because it's really the key to eliminating a lot of losses. Now, the same thing that I mentioned before on the chart when it went below this bull bar on the hourly chart counts now that we broke above the hourly chart. So the high of that bar was 125. And so if we now close this bull bar in 20 minutes below it, 80% chance we're going to go back to 125. Okay, so bulls are happy buying below the 125, which is the high of the, which is the lower high on the hourly chart, because they know that there's a very high chance that we'll break above it then on the next hour. If we don't close below 21.24, bears will see this breakout as failed. They will hold because it's a nice looking bear bar. They will want to see at least a 1 hour trade based on the size of that, so that 2R is to our target. Setting the close of 26. For us, it's better to wait and see when this pullback ends. Right? We said even if we dip below 125, 401.125, we're going to go above it again. 401.125 is the 8 high. So if this hour in 4 bars from now, so that is 6 p.m., what is that, 12 o'clock Eastern, if we are somewhere here, then there's an 80% chance that we're going to go above it again. Okay? Because the market will always try everything twice. So it's breaking above, let me show the hourly chart. It's breaking above this bar now. If that fails, so at the close of this hour we're here, it will try to break above that bar again. If it closes above that, it will then try to get that measured move 41.21.25. So it's now a two-legged correction. The bear stop is above 26. So the bear stop is there, 26. If we break that, this whole correction area becomes a measured move, and then 14.75 is the breakout from that correction area. So the correction area for me starts here at the high of 23, the low of 26. If we break above that, a measured move up to there becomes the target. The first one will be 11.25, the second one will be 14.75. The first one will be 11.25, the second one will be 14.75. Still always in long, nothing to sell here. Traders that sold, so the bears that sold below 21, which is at 1, didn't get a chance to get out, break even, right, after the failure of 26. So they'll sell more above 26, and then their break-even point becomes 313, so that's 3 rounded down. So they need 4103. If we break above 26, they need 4103 to get out break even. The goal is, of course, to trap the bears and just go higher in one go. Okay? And then bears will have to sell higher to break even. So it's close to a 50% pullback. I said the 18 low is to be used. 14.99 was a 50% pullback. We hit 40.9925. So it's to be seen as 50% pullback. But we're going sideways now for 7 bars, and the bears are still in their position. So we need to break above 26 to be able to buy above that bar and go higher. Another way to approach this is by using 2 times risk rewards. So if you think that the 15.25 is our target, so the measured move from, the measured move from the 12 low to the 9 high, 15.25, okay? Then you can use the 15.25 as your entry point and say, okay, where do I need to buy to get a risk reward? So putting my stop below the 18 low, I need to buy at 9,900 for 2 times risk reward to 15.25, putting my stop below 18. So you didn't get a chance to buy that yet, unless you bought during bar 20, but you didn't get a chance to buy that yet. Okay, good bar. Setting up a high 2. Good by 27. You can scale in lower. It's a fantastic bar. 2 times actual risk would go to 12.25. It's even better if we break above 26 where the bears have their stop, and then 1450, 1525 come into play. And then, of course, we should move the range of 26 to 23. Still a chance that we drop down further, but high chance that we'll get back up to that level again. So bulls are buying with the option of scaling in low. What do the bears now need? Well, if they sold below the 21 low or a failed double bottom, they're now stuck. They sell more here to be able to get out break even at 4103. Okay, so we said they will sell one tick below that low. They will sell more here. They need 4103 to get out break even. There's a big chance that they won't get 4103. That we're just going to reverse. They were just going to break out higher, and then they'll have to sell higher to get out break even. But their trade is losing. So they'll be happy with break even for getting a profit. So what you do, you buy above 26 or above 27 to force out those bears. Right? We buy all together, we're forcing them out even more. So this has a chance now to go to 1450. The bulls need to break to a new high of the day. Otherwise, there's a chance that this is going sideways for a long time. Bars are overlapping. We're at the high of the day. And so if the bulls have a good entry, but they're not able to break to a new high, or not even able to get a one-time risk reward based on that bar, then chances are that we are in an area where there's more equal strength between bulls and bears than that the bulls are still overpowering the bears. Now, the bears didn't get their 4103 to exit, so they're still stuck, which is good news for bulls. But this entry bar is not looking great, so bulls will want to exit break even if this bar is disappointing. You need to consider the context that you're still at the top of trading range. And so if anything disappoints, you quickly get out break even as fast as you can. So buying above 27, buying above 26, if this bar does not close as a bull bar or it's disappointing, then you can get out. Now it's closed as a bull bar, so that's still good news. Bulls will give it another chance maybe. But you wanted to see a new high. So 29 needs to get to a new high of day and force out more bears that have their stop above 23. Otherwise, bulls will be very quick to exit. At least the bulls that bought the full position, like it's better to then scale in. But if it's a nice entry bar, but it didn't close above 26. And you would have wanted a new high of the day. But bulls are happy with a bull bar. So 29 will need to prove to me that the bulls still have the upper hand and that we're going to get the breakout to 1525. Now, if you put your stop below 27 or below 26, that is what is considered the skunk stop. Okay? That is what bears will actually try to get to. Correct stop is still below 18 or below 15. This is more of an area that bears actually want to get to. One of the reasons here is the gap on the hourly chart. The high was 4101.25, which is this high. So on the hourly chart, there's a chance we're going to close that gap. So if we're going to close that gap, we're actually going to go one tick below 27. 27. And so if you put your stop here or you put your stop here, it's probably going to get hit. Okay? So the correct stop is in this area, and so you need to trade small and have leverage to scale in if we're going to get into this area or a reversal back up. Okay. Now I said 4103 is what bears need to get out break even. We tried twice to hit it for the bears, and we failed. So the bears are still stuck. Now, the bulls are not happy as well. They bought, if you bought above 27, bought above 26, you are not happy with the follow through on 29. Most probably we're going to go to above 26 again, and bulls will still hold, but the chances are now increasing that we're going to go more sideways than actually reverse back up. And so that means that if we're sideways, that the bulls will buy the bear bars and not the bull bars. The hourly bar is almost closing. The hourly bar wants to close above 41.0725, and then take a bigger move up. But bar 30 is really the last chance that bulls will wait for a new high of the day. Okay. So bulls that bought above 27, they want that new high of the day. They had a good entry bar, 50% pullback on 27.28. So now they want to see a new high. Their actual risk is in the neighborhood of 41.12. All right, so the hourly bar just closed. Bears are being forced out. We tried three times now to get them out break even, and didn't work. And so bulls need to take it over, but they don't have a new high of the day yet. So their problem is that their stop is so far away. Once there is a new high of the day, they can raise their stop. And I think that's what is going to happen. So I think we're in some sort of a channel. It could be this. But it's some sort of a spike in channel, probably going to get a measured move, 18 to 20, maybe 22. I'm thinking this is going to be a range where we'll ultimately break out of to the upside. I'm just not sure if we're going to go to 41.0125 again first, but it looks like we're going to go up and then hit 41.0125 later, maybe on a pullback, or tomorrow in a pullback. So right now, I'd say it looks to go higher, 41.15, 41.2175. If Rose can get it for you guys, those are the targets that I'm looking at. Again, this is making higher highs and higher lows. Nothing to sell here. All of these bear bars look not very bearish. We haven't broken a higher low yet. This was a fail and the bears are stuck. So if anything, the bears will try to get out break even. And I'm thinking now that we have a breakout pending at 31, we could actually go higher quickly to 41.14, 41.15. Okay. So if there's any questions left, please ask them in the Discord, tag my name on them. Thank you very much for attending today. Stay on, because Rose is going to take it over from me and guide you guys on to 41.20, right? That will be easy. So thank you for attending. Hope to catch you guys next time, and happy trading.
Right, hello everybody, this is Rose. Today is Wednesday, April 26th. It is almost 1:45 p.m. Eastern time. All right, so you can see that we are clearly in a trading range. Market wanted to continue its bear trend from yesterday, and in situations like this, you're going to get a 50% follow through in the first hour or two. At the open, we open within this trading range, but you can see that first 3 bars sideways, but we're keep pulling to the EMA, above the EMA. It's because it's just too low to sell, and the bears are not going to be selling this at the low, so they're looking for is pullback. Since the EMA is below the 1-hour EMA, so we're in a bearish environment. Selling above the EMA, it's a much better choice for them. So here we go. We failed to get above the bar 1 high. anybody who bought here might be buying again, breaking even with 4 and 5. Anybody who sold sells above, so they're breaking even. So we're clearly in a limit order market. So, but it's also making some kind of a triangle, and we're gonna get the breakout. So here's your breakout. We're making double tops and double bottoms, right? So finally we're making a lower high right there. That's a signal. Basically it's telling that it's going to sell, and chances are we're going to test this low, and we might actually continue to come down. So you have a wedge here, pullback, right? It's a trap above the EMA and above these double tops. Therefore this is a bear flag, and it's probably going to come down further low. So we made a new low in April. I believe that's the low in April. But we are oscillating around 4,100 for the longest time. You can see that we have a trading range here. So I'm going to measure that trading range a little bit. You can see that. Let me extend this. Trying to find the heart of it. I think that's just fine. So we have quite a bit of breakout here, but we didn't really break out to the upside to basically get that same measured breakout to the upside. Now if we hold it, we might still go higher. If this is it's inverse head and shoulders, market might just go sideways a little bit. Okay, so but could try to stay above the EMA and could close the day above the EMA. So you have a big down, big up confusion, and you have a trading range. Okay, so bears are wanting to take out the bar 79 from yesterday, that low, and they want to sell. They want to continue to sell because they might be seeing a 1 pullback, 2 pullback, 3, or 1, 2, 3. They might sell here, and if we go back up, we might make a wedge top and a big bear flag. Then they might sell. So if they fail to sell around here, that means we can go sideways and up. Okay, so we did not test the March 22nd high. That's always been a area that bears want to come down and test it. And in fact, there are a ton of sellers here from March 22nd stock. So they have been selling at the highs and failed breakouts, trying to break even. They already have, but market needs to come down and test this. Now we talk about this because this is a bull flag. Okay, so it's a form of a bull flag. It is a expanding triangle. So now we're testing the low. If we actually break out from down below, we could get a measured move to the downside. This is what the bears want to do. They not only want to test this high, they actually want to breach this breach this high and come down and test these moving averages. And they want to close bear bodies. And the first pullback, the bears would sell and they would get a bear flag. Okay, so, and that would be a failed double bottom at the spike pullback channel. But right now we don't know that. This is a trading range now, right? And could be double top. I'm sorry, head and shoulders, okay? Or double top. There's a much bigger possible head and shoulder, left shoulder, head, right shoulder. So bears want to bring the market all the way down. Now, there's a gap here. If this bull gap stays open and the bears actually fail to test the March 22nd high, and this stays open, here's what can happen, right? So it could go up, it could come back down, and then we could end up going higher. I don't know if this is the case. This is a pretty strong bear day from yesterday. So we do have a continuation at the open, and we sold, but now we're in the middle, so the market hasn't decided yet. But on the hourly chart that I have been trading for since the beginning of this week, okay, so, and I put these levels last week. I don't know if you guys remember this. all of these levels, especially this right here, okay, is this right here. This is projected, and this is also projected, and this is the expanding triangle. There are two alternative lines, okay, so the bears are targeting. And I did say that last week, we're holding here, okay, so, but we do have a 50 EMA up there. We could trap, we could trap the bulls trying to buy it because they put their stops down here. When market is coming down and it breaks below certain moving averages, it's going to go back and test it. It's not going to sell here because it is already too low. So you have to allow them to go up. That creates a bear flag. You can trap these bulls with a double top, lower high, or double top, lower high, somehow above these EMAs. And you know their stops are here. So if they're actually selling, right, you sell into those stops, that's your measured move right there. But I also have other targets, and yesterday I said we're going to test these targets because we broke this area. There is a much bigger measured move. Okay, market is probably trying to come down to this level, but we have to see. We might go up a little bit. Possibly it might be testing some kind of a gap here. There's a gap here. We'll close this gap. Hold on, I don't know. Hold on a minute. Let me see. I'll take that high. Nope. We haven't really truly closed that gap. We left it open a little bit because the bodies are not overlapping. You can see there's a tiny little bit of gap left open. More gaps are here, but this whole area is support. So we haven't tested that support. If we can find some sellers, we might actually continue to sell. I would like to see market to continue and give us this measured move target. Okay, so they might sell. I don't know, but we'll see. Right now we're in a bear channel, right? So and we're pulling back a little bit, trying to find an area to sell again. So there's a little bit more room to the downside for bears. They might need to pull back a little bit, but the momentum is to the downside at the moment. Now on the 15-minute chart, you can see the yesterday sold. You have several different measured move targets to the downside. When you get a bear move like this, what you're going to do basically is you're going to look for a bear flag, okay? And the best way to do that, just you look for triple tops, double tops, and you look for traps. Now, who are you trapping? You're trapping the bulls, okay? They're trying to break out. They're trying to close these gaps, and they're failing to close these gaps. Anytime these bear gaps fail to close, okay, that means like there's a gap right there. You see this gap right here? That white area is gap. Anytime these gaps are not truly closed, that means we're not going to go to these highs. We're not going to go to that high. We're not going to go to that high. Okay, so bears are defending here. That means market is going to look for opposite side gaps, such as right here. There's one right there. There's all the way down to here, right? So that's where the bears are going to move the market, and they're going to try to get down to those gap areas. And that's what they did. They just came down. This all happened in the London session. Okay, so here we go. We have a lower high, triple top, and we have lower high. So that's a bear flag. And then once they close this gap, look, if that gap closed, what are they going to do? They're going to want to come down and test that low. So what you do is if you keep selling, basically is your runner is running towards that prior low. You have to pay yourself there because we can just breach that low and we could just go right back up again. Okay, so I don't have too much information here, but 1, 2, 3 possible wedge there. Okay, but I don't think that is the wedge anymore because we have broken the structure. So we started to come down. That's pretty much a measured move target. And that was for here. If you actually take this high, and that was right around there. So we breached that, although I don't know if I just took the right high, right? So I might even take that one, that's it. So then if you look at it, we actually met the measured move targets, and then those who are still selling, they're looking for a measured move target, but they are also completely undermining this overshoot and trap the bears still trying to sell. Those people are looking for continuation to downside. But at this point, we're meeting a major objective here. You cannot assume that bears are going to keep selling and selling and selling. It has to pull back. And what happens is that you get this third push, which is an overshoot, okay? And it traps the bears, and then the bulls show up. So now the bulls, there is a gap here. They want to close the gap. They close this gap. Where are the other gaps? There's a bit of a gap here. That body to perhaps to here. They also close that gap. So if the bulls are closing these gaps, that means they're trying to get to the prior highs. Here's another prior high, but there's a gap here. Although they close that gap, let's take a look. That gap is closed, but they couldn't get to the high. So they closed this gap right here. Okay. And then immediately reverses back down. But I don't know how far they're going to be able to come down because they're buyers here. There's a bull gap right there. We are testing that right now. And if bulls are strong here and they hold the bears intact, here's what can happen. We can go up, we can come back down, fail to close this gap, and then find buyers. That would become a wedge bull flag, and it would also become a inverse head and shoulders, and then we would go up to that high and we would get a measured move up. So I'm expecting market to get up to these levels and then maybe sell from there. So I'm watching if this area is going to hold. The problem is that we're in a trading range. Okay, so this gap is still open. You can see the trading range right there, and this is the balance zone, so we'll keep going into it. We are right now below the EMA, but look what's happening. We do have an imbalance bar 37. Pull back to EMA is double top 39.40. Now it's trying to get a bear flag breakout to the downside. It's trying to close this gap, so it's trying to test the bar 18 close, okay? So it's bears are trying to bring the market down here. We do have a first push, pullback, second push, pullback, and the final could be the final third leg. There's a bit of a head and shoulders here, so they broke the neckline, they're coming down. First flag, second flag is we might get even a third flag, but I don't know. So target is there in this area. Okay, so as they try to come down, I'm going to look for reversals. But if we get a trap here, just like 42, look at the 42. 42 is not a breakout bar. It actually it was selling, so everybody else sold, but now it closed above its high. So now there are some bears are trapped. So if this becomes a breakout failure here for bears, we go right back up to the high, because where's the lower high, last lower high? These bears are selling, their stops are here. In order for bulls to get back above the EMA, okay, so today could be like this. We could just go up, come back down, and close the day above the EMA. Okay, so I think we are going to try to go run those stops above bar 39. So we could go see if we can sell around 36. There's the sell zone there. or we're just going to break out. We're going to have a higher low, wedge, 1, 2, 3. Okay, so and we have a structural breakout right there. So bulls kind of showing us that the pullback into any kind of gap, they will try to activate orders because they want to get back up above this high. They also want to take out that double top, and they want to get a measured move to the high side and on to this high level. So they have to first start to close above EMA. They're just about to run those stops above 39. Okay, so you have to look at this as it. Okay, so I'm selling this, but how far can I sell this? Okay, can I, continue to sell this? Look what happened with the 41 and 42. So now anybody who's stuck here, who's sold underneath 40 or sold here, they sold above. They're trying to prevent the stops to be run. So bulls are trying to run the stops. Bears are trying to sell at the high. Okay, so there's 3 bear bars. Their limit order sellers are there, and they're trying to keep this bear gap open so this could continue to come down. So the reason why this bar slapped down so fast is that because there are bears stuck here selling, and they're trying to break even. Now, how far can we come down and look for a swing buy, right? So there's a breakout point right there, and there's a gap right there. We could even come down one more time if this bar finally closes bearish. You do have a first sell. They're trying to get a second sell. Therefore, they're trying to get a double top low to bear flag. Remember, you always look for 2, 3 bear flags. Okay, market structure says if you have a double top neckline taken out, you look for a first flag, second flag, third flag, and then the final fails and it starts to reverse back up. Okay, so we'll see how this goes right here. So depending on where this bar closes, bears could exit out because they kind of got their break even already. So this is why the bar 43 body is still trying to become bullish and close. Their market is just getting the stuck bears out. But if it closes bearish and breaches below the break-even point, then bears are going to hold their runners. It could come down further. We could get a micro. There's a micro wedge there already, but I wouldn't count on. So I would just look for another at least before reversing back up. But if this bar closes bullish, then market makers already ran some of the stops above 39. They want to reverse it back up to 36. Okay, so leg 1, pause, and then a leg 2 and a leg 3. They want to get to the 36 and then furthermore up to the 32. But it's a trading range now. We're oscillating around 4100, which happens to be right around open of the day. So you can see we were there, broke out, came back to the open of the day, tried to break out, failed, came back to the open of the day. I think we might end up actually closing around open of the day today if the bulls fail to get out, get a breakout. Can the bears get a breakout? Well, we're still bearish. We're below the key price level. Bulls still trying to get up here. Bears don't want to sell here low. I mean, they already proven to you that they do not want to sell low. Every time they're selling, it just pulls back, and then they sell the pullback. Pulls back, they sell the pullback. Pulls back, but it's a very strong leg. Most likely, it's trying to get a slingshot. Slingshot generally starts or forms if the leg is bullish. You look for a deep pullback and then go. Okay, so that's what might be happening here. So I don't know if the bears are going to keep selling this or able to. They have to do really good and close this gap and then give us another new low. But even then, we would get a nested wedge patterns. Here is one. We would get another one, right? So then I would look for a big swing reversal. So right now we're at the, in the middle of this congestion zone, and the market is deciding. I don't want to sell, to be honest with you. we have a micro double bottom here. There is now a micro wedge there on the 15-minute chart. So here's your wedge, 38, 42, and 44 at the moment. But it's also a bear flag. So if you're going to sell, then you have to wait for this bar to close bearish. But you're selling into this area, there's not much of a space there. Can we come all the way down here since we are in some kind of a trading range? It is possible, but there's a tight trading range here. Strong bull move. 50% of that bull move is where the buyers are sitting. Right here. That's why we're stalling here. And tight trading range, it's probably going to attract a price, and we could just snap right back in. This micro wedge could create bullish pressure. So I want to see where this bar 44 is going to close, whether this is going to be a failure or the bears are going to sell. Most likely it will be a failure. There's already gap still open, even though we're breaching this gap. We have not closed it. We have to overlap with the bar 18 close to be able to successfully close this bull gap. If it fails, then the bulls are going to show up. It's a double top with bar 39 and bar 43 high at the EMA, so it's a legit bear flag, and it is the second bear flag. So bears are still selling, trying to get that, but get that breakout. The problem here is that there's support here. I don't want to sell into that support, and support is around 4,095 to low, right around here, bar 18 low. So this area is support. It's also the 50%. This area on the 15-minute higher time frame is still support. I need to see bears do a lot better. Now they can still sell and come all the way down to the 40, 93, 92 area before even bouncing. So that would still be a breakout for the bear flag. But if it doesn't get continuation and a failed breakout, we could start to get bulls. So, this is why I don't want to sell, because there's not much of a room here. Market is probably going to go sideways and possibly sideways and slightly down until bar 48.50. So I'm going to leave a little bit of room for bears to try to move this further down before I even look to buy. Around 1:30 p.m. Eastern time we tend to get average 12 to 16 or 18 to 24 bars or I say 20 points average swing setup. So I'm going to wait for that. We made a new low with 44, but notice how the 44 body closed. It is strong, so they will probably going to sell it. But you're again looking for bears to close this gap right here. Any failure could bring the bulls. Don't want to be stuck in that. And in fact, I actually want to buy. Let me see if I can show you an example of what I'm looking for. Here you go. Okay, so big down, big up, sideways, bear flag. There's a gap. They're trying to close the gap. So we're basically in this, okay? Okay, so we're in that leg. And if that leg suddenly stops, maybe in this area, we can end up going higher and closing the day somewhere above the EMA. Okay, so that could be what we might end up getting. We are below the 200 EMA. If you're using an ETA chart, that makes us a bearish sentiment. Okay, we're in the bearish market. What can you do? Well, if the market is showing you new lows, every time it pulls to the EMA, try to sell a double top. Try to sell a double top lower high. We're making lower highs, but finally we made a high. High is higher than that last lower high. So bulls are showing you something here. Okay, so they're saying, listen, I think we may not go that far because we kind of broke that structure. Yeah, we didn't get any continuation, but we might just come down and look for buyers because this is a limit order market, trending trading range. So better to buy with a deep pullback. And this is, no matter how I look at this, I'm trying to convince myself not to sell. That if I run out of any reasons I can no longer sell, then I might consider selling. But I'm not running out of any reasons. I still see the why, reasons why bulls could show up. And in fact, where would be their target? Okay, so let me do that. 10 days is impulsive sell, pullback. Impulsive sell, pullback this is the third leg down. Therefore, market already came up there. Okay, tested it. This is their target. They need to break above this trend line to get back up to here. In fact, I'm going to try to see if there's something else that I can, maybe I can do a 30-minute impulse pullback. Impulse pullback. Don't like that. Maybe impulse. I don't know if we're going to be able to get up here. Probably no, but we might get somewhere here and then come back to the EMA. Okay, so it's going like this right now, but the EMA starts to flatten. The only reason it starts to flatten and starts to go higher, we start to get bull bars. Okay, so that's what EMA, basically the calculations of these bull bars, okay, closes, opens and closes, right? So it kind of rotates the EMA, and we could go up, come back down, maybe bounce again, and close the day somewhere around there. And tomorrow, we could end up going right back to that target if the bulls cannot do that today. Could it come down? Well, the open is, we try to sell, which we did the first hour. You can see the first 12 bars. Now, and then it started to go basically back up reversed, but to me, this is sideways, okay? It's trying to go sideways and up. So you get a 50% chance of follow through selling if the prior day is a sell climax or any kind of bear day, and a 75% chance of 2 hours of sideways and up at the end of the first or second hour. Okay, so here's your first hour is sideways and up. Now we're still going sideways. Are we going to get continuation, or are we going to just keep selling, reject all of this, maybe sell all the way to the bar 15, maybe keep this gap open, and then get a double bottom, okay, higher low, and then a swing high? I don't know. Right now, like I said, this is still a bear flag. They're still trying to come down to the 18 low or 18 open, or there's a gap here. I'm going to take the whole 18 since there's a breakout and follow through. This is support. And I think market is trying to maybe test to see if there is any kind of buyers here. So the bear flag, terrible breakout, terrible follow through at the moment, but it is going down. That micro wedge with 38, 42, 44, you have an inside bar, micro double bottom. Bulls try to buy it, but that's, if you're buying above 45, that's basically is a low probability entry, especially if you have a support here. Market is going to try to push into that support. So if you're buying that, and not a good idea, just wait for a second entry. In fact, we now have a new low. So that kind of proves the point that there was a better place to buy down here, and the market is pushing. So now you have a new wedge. I'm still waiting. I'm flat, and I am waiting. We also have a spike pullback and a channel. Look what happened here. This is spike pullback channel. First test, they sell it. Now, they're still selling. I cannot touch this. It's still support here that hasn't been tested. And I don't see a good buy signal bar either. So you either sell or you're flat. Okay, so but I want to buy. I just need to see this area tested. I want to go long, but it's not ready yet. I still want to go long. Now, the reason why I didn't sell and decided to stay flat, because I didn't see too much of a space there selling into support. Didn't want to sell it. But if you sold a close is 0.44, you're making money, but it's a limit order market. Okay, so selling close is like selling with market sell, or if you sell one tick underneath 44, there's not much of a space. Since this is a tight limit order market and there's no decent breakout, if you're going to sell with a pullback. So look for a bull bar, 45. Instead of buying above 45, there are probably sellers above 45 looking for a continuation down. But again, I just didn't care to sell. I'm just going to wait a little bit more, see if I can get a good buy signal bar. We can continue to come down around 40.90 area before buying, which is right around here. Now, why 40.90? Let's talk about that. If you are bull and you bought here, the market went only 5 points. That was nothing but a scalp, no counter trend. So they're still selling from there. They're at the 15 point. Okay, they're trying to close around 15.75. If they do close a bear body underneath this pink line, you're going to end up going to, or waiting for a market to get to the 20 point. At the minimum 19 point, okay, so between 19 and 1 point below. So I'm going to mark the 20 since it's going to be testing below this support, they might actually test the 19 and reverse right back up. Again, there's not much of a space, so I didn't sell. Okay, so the bears got their bear flag. Anybody sold? If you were going to sell, you need to wait for a double top and a strong bear bar. So the 44, anybody who sold, looking for a second leg here. Now they're looking for continuation. Their swing target 20 point. But they need to close bar 47 body, 1 tick below that pink line. If they're able to do so, then they're going to continue the swing short into 20. And then we come very close to the lows. I'm more interested in from there to there. Okay, I'm more interested in this, but I'm also gonna keep an eye on that. Buyers are waiting there, buyers are waiting here. So there goes, bears are selling with low 2 below EMA or double top bear flag. So it's still bearish. We're below the 1 hour EMA, that makes us bearish. Head and shoulders, a bit weird, but it is there. Now, we still have a head and shoulders, inverse head and shoulders. However, any head and shoulders pattern, just like any pattern, it can actually get invalidated, especially inverse head and shoulders, because bears see a bear flag and they want to keep selling. Okay, so therefore we don't know if this is going to get invalidated, but the only time it would get invalidated, bears actually get a really nice bear body closing and the pullback fails and we sell. That means we can actually take out that bar 12 low. So looking for, let's see if the 19 is going to be tested. It's coming down to the 19 point. 90.75 for micros is 19. $20 point is 89.75 for ES. So that would be 90.75 for 19 point for ES. Also, we still don't have a close below that 15.75. And this is still support here, guys. So be careful here. We're testing middle, a little at the center of the support. So we know there are limit buyers waiting there. I'm just going to wait for this bar to close and see if they can actually test that 20 point zone. Anybody who sold underneath 33, 20 point, their 20 point is there. They just tested the 15-point swing and they're inside a buy zone. So this might end up bouncing if you're measuring from where you entered right there. Okay. So yeah. Let's see. If we can trap any bears here. For MES is 91, 4091 is 19 point, 4090 is 20 point. For ES is what did I say? 9075 is 19 point, and 8975 is 20 point. So there's a tick slippage. Well, it's because there's a congestion here, pullback, and a second leg began for bulls, and there's a breakout. So and price is coming back to that area is support. You can take the whole area because buyers were strong there. Look at the leg; it broke out with a bunch of imbalance bars, so it's a bunch of gap bars. If a leg that strong, buyers were coming in pretty strong. So from that area I just marked the first breakout level, breakout sideways, and then they showed up. So to me, this is support, but support could be somewhere also here. So that's where the 20 point is anyway. So it could continue to come in here. That's why I'm not buying. I'm still waiting for these bears to hit their 20-point target. I just took 18 because that was a leg one pullback, and second leg began. Just averaged it. You have to wait for a strong bull bar, okay, to close. If this bar closes with a decent bull body, there will be bears exiting out above 48, okay? Okay, so it's, like I said, it is support here, but especially if we get a second bull bar, more bears will exit out. But what if we get the same thing that happened with 45 and 46? It could still happen because bears really didn't get their 20 point just yet, so they could still sell up here. But this is a really nice buy signal bar at the moment. So if you buy now, you may end up buying lower again. But if this bar now closes bullish, and even if we end up getting 3 bull bars back to back, that would be a momentum. You could buy the pullback again. But right now, it's only 1 bar. It's a good signal bar from a support. My only concern is that bears really didn't test their 20 point. So this is basically a small pullback bear trend, okay, it's coming down. It's just a confusion. So big down, big up and then now coming back down. More than 50% of this bull move up. It's probably trying to test the 33% pullback, and there probably buyers are there. So we need to just wait a little bit. That right there is 33%. Even if we breach in here, this is a buy zone because we're clearly in some kind of a trading range. So we're going to bounce at the 20 point, but if we do, continue to sell, this area is a buy zone. Micro double bottom on the ES, and on the MES, it actually went 1 tick below. If it closes bullish, then you get a trap with bar going 1 tick below 48. But on the ES, it hasn't gone below that. but bar hasn't closed yet, so we don't know. It might actually go lower than 48. Bear still selling the pullbacks. So it's a small pullback bear trend. That means they will sell above every pullback bar, and they will sell at the lows. But I'm seeing possible trap here on the MES. Could be signaling us. The bulls might be finally showing up, but this bar has to close bullish. I don't know yet. Sellers might be waiting up here. This is the bar 48. There's a wedge here, 1, 2, 3, or yeah, 1 pullback, 2 pullback, 3, but I would take that. So this bar 48 is, can the bulls give us is about hour long at the minimum reversal back up. We need to get another bull bar. So I am, if you buy above 48, and if it suddenly comes down into 4090 area, you're going to have to be ready to buy again. So I bought above 48, and I am looking for a 4-point move, and then 6-point move, 5-6-point move to 4098. But it's a breakout, bear breakout, so limit order sellers are probably waiting here at the 95.25 area. Okay, so we might get a second entry long also. So this is really nice signal bar. See, it's right in the support. I took a chance. I bought above 48. I'm prepared to buy again. I entered small. I'm getting ready to enter more. But if it turns on me, if I enter with a small lot and it turns on me, I have a chance to break even by not adding too much to the risk, right? So, but if you enter with large lots, you're not giving yourself enough room. So there are probably buyers above this bar, 49. Okay, the question is, why on bar 45 it's better to sell, but 48 bears might exit out? Or actually, I guess you just answered it. Have I? Because I don't remember what I said. I said a lot of things. If I answered it, I'm not going to go over it. It's a small pullback bear trend. So if bears see these as pullbacks, so they're going to try to sell. They're going to try to sell as much as possible into these support, and then they will exit above bar like 48 or 49. Buy stone. Have a good evening. See if what other questions here. There will be an end of day recap done by Brad Wolf starting at 4 p.m. on YouTube. He posted the link under the All Things Trading channel. So I'm going to try to end the session quickly at 4 o'clock. That it won't overlap with his session. So you guys can jump in and follow him there if you like. Some bears try to sell the close of bar 49 because that's what they have been doing, selling the close of or the high of any bull bar pullback. So they're trying to continue their, price action. But this bar is really nice, and the moment we get a third bull bar, that's momentum by bulls in the market, indicating they could go directly to the 4098 and a further above 4102, 4101, 4102 area. But I did say that because it's a breakout, that micro double bottom broken 44, 45 with a bear bar 46 and continuation 47, I said limit order bears are waiting at the high of 47. So if you buy small, you can always fix it later, because these bears are going to want to continue the small pullback bear trend all the way down these areas. And there's that 20 points. So this is why I said I could buy very little, very small, and in case if it comes down, I'm willing to buy where they might take profit around 20 points. And if price goes up, I break even. I can do two things. I can exit out, go flat, and without a loss, or I can unload some of the risk by scalping out 90% of the contracts, and then I can leave a runner, see if it actually will go back up to 40.98. That's if we don't make a new low. If we make a new low, if we take out the bar, that micro double bottom 48 and 49 low, then the 40.98 is not the target anymore. That won't be the target. So anytime the bears take out that low, that means we're still in a small pullback bear trend. It's still coming down. It's still trying to get to the 20 point, which is right there. That's the 20 point for bears. But market started to show you something. Bulls are started to make money above bull bars. Look at bar 49. If you actually measure from here, okay, that is the problem with this. It's only 7 ticks. It's not 8 ticks. You need actually 9 ticks to be able to say, hey, these bulls are making money. If all they're making is 7 ticks, you need 2 points an extra tick. That's 4, 4, 8, 9. So this is 2 ticks short. So can I actually say that they're making money? Maybe they made a 1 point, but ATR is so small. ATR being this small and price coming down, like it's telling you, this is a strong small pullback bear trend. You could keep selling. But now I'm getting really strong 2 closes, and I see that bulls are still making money, but it's just a 1 point. So maybe bulls are waiting for a second entry long. So in order to get the second entry long, you need a double bottom higher low or some kind of a double bottom. So you now have micro double bottom 48, 49, double bottom 49 and 51. Okay, if the 51 closes bullish with a bull body, that means limit order bulls are going to be entering, and they're going to try to get a second entry long. We could still go right back up to that 40.98. And going to 40.98 and being able to close above it, we can even go up to the 41.02, 41.01, 41.02. But they need to close this body bullish, give us a second entry long. There's wedge, double bottom. It would be better if the bar closes higher. So you have to wait 1 minute and 50 seconds. If the bears take out the micro double bottom, then they're not done. They're going to keep going down to that 20 point. Can we get suddenly a swing long, and closing, suddenly we end up going all the way up here? Market is trying to reach this area in between here and this 41.29 to 49.27 to 41.30 area. Can we get some kind of a swing long? Yeah, we might. This could be one big bull flag. Look, 1, 2, 3 wedge bull flag. Now, how would you recognize that bull flag? Is if we start to get nice bull bodies, and then we go like that, and then we come back, and then we can just bounce fast. We would take out that high. That would give us a measured move to the upside. That could get us to that 41.30. Could it happen today? There's plenty of time in the day. I don't know. Right now, we're going sideways. is we need to see bulls coming in fast. Otherwise, we could just go high, and there's a gap here. We could close that gap. We could close that gap, and then come back to the EMA and close at the EMA. And then tomorrow, we might actually become bullish. Well, who knows? We'll see. Can it sell? Well, they might, but you can see even on the Globex session, we ended up buying and trapping the bears. Anybody who's trapped here, they sold at these highs. They broke even. They're trying to bring the market down to where they entered and got trapped, maybe right there. So if we kept selling, and if we break this, we could actually maybe coming down here. So market is still bearish. There you go. We're just going to that 20 point. We just tested the 19 point, 89.75, 90.75 to the tick. That is the test of the 20 point. But the bar hasn't closed yet, so it could still come down. So anybody who bought here, they're going to want to buy something here as it bounces. Why would it bounce? Because the bears would start to take profit. 20 point is a big swing item, right? So swing move. So they're going to pay themselves. As they're paying themselves, stock bulls will enter there, and they're in the middle somewhere. They will break even. I'm still waiting. I mean, they came so close to 20 points, so might as well let's just wait for that 20 point to be tested, right? You also want to see a bull bar. So bulls failed, but nice, but they're kind of showing you something there with these two bars. Okay, so this might be slowing down, but we need a failed breakout. If we see that failed breakout, then you can say, hey, we're getting another bull bar. We might be able to buy and get back to the EMA, but it is still a small pullback bear trend. They are still selling. There were sellers up here, limit order. There were sellers underneath 50. Now, what happened with 51? One point, it was a really nice bull bar, but it didn't close bullish. So that means anyone who bought here, anyone got stuck here, they got a break even there. And they got out, and the bar closed bearish, okay? And that was nothing but a break even event. So that means bears are still trying to get their 20 point solid. You can't buy. So this could just continue down. Just about to test. We came so close to 20 point. All right. Micros just tested 20 point. Yes, also tested, but I said I'm interested in bar 11 high. Okay, so anybody who's stuck here selling, sold all the way up here, got a small pullback bear trend. If they want to test probably 87.75, but you're testing the 20 point. Their bears here want to pay themselves, and their counter trend bulls want to possibly buy into that profit taking. So it has to bounce a little bit, but if it continues to come down, I mean, we're still selling. We got a really nice breakout bar, but we're probably going to get some kind of a inside bar and a bounce soon. What about exhaustion? Well, it's a breakout bar. Now, there's a wedge there. We're breaking that wedge, but that is exhaustion. Look at the bar, the size of the bar. It's bigger than 34. That body is bigger. It's probably going to continue now, okay, selling into here. So they broke this. Now, where is 30? They're trying to get another 5.6 point. Can they take out the bar 12 and get a 30 point and then bounce? At this point, you're not going to buy. It's accelerating. I said you need a bull bar to buy. They broke this wedge, so they are selling, okay? You can also say This could have been measured move. So here's a measured move target. If I take the whole leg, okay. So they could continue to sell this. Small pullback bear trend is getting a breakout into the lows. We now have a breakout. Good for the bears. So I didn't buy anything. There's a gap here. We will close this gap. So what's happening here is that that's 20. If I add another 6 point, that's 5. Here's 6 point. Bears are trying to close that bear bar. Okay, so beyond that 26, because they want to come down to the 30. The measured move is right there. I do still think that it's going to end somewhere. And since now we have a true trading range, we're probably going to find some buyers soon. Can it continue to come down? We could actually extend a little bit more, but I do expect a bounce. 20 didn't bounce. They didn't take any profit. So we're going to bounce, so we're going to go back up to the 20 point where we breached. They didn't take any profit there, so it continues, but eventually it has to go up. We broke this. There's no bounce there. So now we're in the support. There's no bull bar. You cannot buy this. It's a big bar. It's bigger than, almost bigger than 34. I think it's bigger than 34. A bar like that will get continuation. Okay, so now is the time you want to pay yourself a little bit here because it's probably going to bounce. I'm just going to wait a little bit, waiting for the bar to close. Can it continue to go further down? This is pretty good. Small pullback bear trend is actually breaking out. Where can this go other than 30 point? Can end up coming down all the way to here, right? Why there? 30 point is closer to the March 22nd high, which we have been saying. If you ever read those blog posts, always pointing out to that March 22nd high, which is right there on the daily chart. And is on the hourly, okay? We still have a little bit more room to the downside, but we're in support and it's kind of exhaustion. Anybody who's selling underneath 52, they're expecting continuation, but they're ready that buyers are going to show up soon. So I'm waiting for this bar to close. Buyers are going to show up soon. So I'm waiting for this bar to close. Now, what happened here? I was waiting for bulls. They never showed up. We made a new low. Small pullback bear trend. I bought here. I did not buy. I'm just waiting for this bar to close. And as it goes higher, I will break even. Bears are started to pay themselves, but we don't know yet. The bar hasn't closed. It can still continue to sell. But since the 20 point didn't take any profit, we're probably going to go up to that level. Maybe there, maybe 1 point below. But we will test that area. Bulls, on the other hand, is if they want to buy, they need a good buy signal bar. Or they need some kind of a outside up bar, inside bar, some kind of a reversal. Not only to bring the market up here, and then they're going to probably want to close this gap. If they can't close this gap, we could easily get up to the EMA. So waiting 17 more seconds left, the bar to close. It's a bear bar though. So higher its body closes, there might be buyers, but it closed below its midpoint. So I need to wait for a bull body or a bull signal bar. Can the bears continue just further down? These bars have gaps, so these are strong trend bars, even though bar 53 has a lower wick. Now, what do we need? Well, we need an inside bar with a strong bull body, or we need some kind of an outside up bar to reverse this back to 88.75, 89.75, or the upper 1/3 of bar 52. There's sellers waiting at the upper 1/3 of 52. Bulls know that eventually market is going to go there and look to sell again. So they're looking for a bull bar to see if they can actually buy here and break even. If anybody who bought above 48 or even close at the close, buying the close of 49. So therefore, if you're stuck here and say this bar is bullish, just think of it as a bull bar and say it closes there. This would be the break even right there, which is just about 89.75, just about 90, something like that. So I'm going to mark the 88.75, which is a 21 point. Somewhere there and a further above is break even for bulls. We don't have a bull body yet, so you can't really measure that. And there's no buy signal here, so you can't really do anything. You just have to wait for it. Do anything. You just have to wait for it. So where can the bears take us? Maybe tests right there. Or overshoot first. Market was buying underneath these bull bars, these lows, and making money. So bulls can still do the same thing. Is certain points below, maybe 2 point, maybe 5 point, maybe 10 point, they can buy. So if you measure from here to there, that's about 10 points. Can the market dump 10 points? They have to take out the 12 low. They have to take out this. Okay, support. It's still a support. I still don't have a bull bar. I still cannot buy and expect a reversal back up. I need some kind of a bull bar. Bears want to get there probably 40 point, but they're going to have to close. They have to accelerate and then go up a little bit and then come down. If they cannot take out, what is that now? Oh, okay, so they're at the 30, almost 30 point. 30 to 29. They haven't really tested the 29. This could still sell. Be careful. These guys are trying to get additional 10 point on top of 20 point. So I wouldn't buy this bar just yet. It's not buyable. The bar hasn't closed yet. Bears could suddenly sell this into the 30 point and then reverse. So if you're buying right now, just because it's testing a zone, it's just an approximation. It's just guesstimate of that maybe is support. I don't know. They already breached it, right? So, and it's completely empty, void. So all I know is that they can continue to sell this. But if a bull bar shows up and it's a decent bull bar, maybe a pin bar or something, they could buy. Now 54 is a sign of some bears are covering, but it's not a good bar to buy. So the bears market is going to try to test the 50% of 54 to see if there are any buyers, and they can actually reverse it back up to the upper 1/3 of bar 52 or the midpoint of 52, which is 88.75-ish or 89.75, or mid to upper 1/3. So they're going to try to get back up to 40.90 area, 40.90, 40.89, 40.88.75, but there's no bull bar there, so it's very difficult to buy. And what if the bears actually close another bear bar and continue to take out the 54? it could still come down to 30 point, to 40 point. It's still selling. So they proved us that even though the bulls were showing us something nice, but it accelerated. When you get a bar like this, it's a climactic bear bar. We're going to get back above that bar, its starting point or its midpoint. Eventually, we're going to get there. But you need a bull bar. You need limit order buyers entering the market. We don't have that yet. But this is a climactic bar, okay? So therefore, the top of that bar and the midpoint of the bar, we're going to snap back to it. It's just that it hasn't set up yet. So all I know is that bears are doing a terrific job here. There's a measured gap here. So they're probably going to continue to sell. Maybe open here and the close of here, or from, if you measure from here, right? So it opened there, maybe close there. Sorry. That would become the measured move target. If they can make it down there. Or if you're averaging, we are already there, but that's not how I measure it. So I'm going to measure from there so we could continue to sell. Okay, here we go. 30 point. At this point, I only had a 1 contract, so I didn't do anything. I'm still waiting. It's at 1 micro. But guess what? I'm actually selling on the E-mini. Now I see the micro is not making money. I can actually sell. So I'm making, I banked this leg down on an E-mini chart right next to my micro. So that's the beauty of trading with multiple accounts on different. So I test the waters with micro. If I'm not getting what I'm looking for and the market is not ready to reverse or take profit, and the bears are showing me, why sit there? I can always fix this. This is no problem, but I cannot fix it with the E-mini. So what do? You can do 2 things. What did Tim said during this morning's live webinar? You have to be ready to exit out or reverse it. So I could do 2 things. I can hedge it, or I can reverse it and sell it instead and take that loss and then make that loss 4 times more back. Or I can wait for market to come in, look for a big bull bar, okay? Well, the bull flag failed. If we get that bull bar though, there will be buyers, okay, will buy it because there was a support here. They broke that support. When a support breaks and suddenly you get these gaps, okay, and a support doesn't hold like that, anybody stuck up here because something reasonable that you did buying at a support didn't work. Market comes down and you see that bull bar. Anybody who bought here won, they're going to load up maybe 3 times, 4 times, 5 times more contracts. As it goes higher, not only they will be breaking even, and it goes higher, they will be making a lot more. Okay, so I could do that too, but to me, it's now came so close to the 30 point. You can see it starts at the 29, 30, 31. So they're already taking profit. Okay, so now I can look to it. See that big bull bar I'm talking about, or a decent bull bar taking out the prior bear bar highs, and look to enter. But right now, my E-mini contract is still making money. It's still printing. Okay, green. So I don't want to exit out. Hold on, there's a question here. What about 2-minute bull bars? Is it reasonable to buy above this range with stop? I mean, that's a spike pullback channel down. Why would you want to buy it? We're already taking out the bull bars lows. We're not taking out the bull bars highs. If we're not taking the bull bars highs and the bulls are not able to make any money above bull bars, you cannot buy, can you? Are you trying to fix it though? That's a whole different story. I'm not sure what you're trying to do there. Oh, so you put a buy stop order with 2 contracts above that is bull bar, and you didn't get filled, but the market took out that bull bar's low, is why don't you just go for a 1-to-1 target to the downside by selling that instead? So that will be target would be a little bit down to 40.7850 area, I guess, on the 2-minute chart. It's going to bounce back up to these levels. The 50% is of 52s, and further up, maybe the test of this is micro double bottom, bar 49. But there's no bull bar. You can't jump in. Is one thing I'm seeing is the bear bodies are getting smaller and the lower wicks are getting larger and larger. But there's no signal yet. There's the 30 point. And if we start to break below 30 point, we could continue to sell into 40. But this is still a support. We're just testing below the support. No bear bars are closing below 12 yet. So is this it for bears? I don't know, maybe. As soon as I see a bull bar, I will exit out. I'm going to close my E-mini trade, and I'm going to jump in with another micro to break even. So, because there's a potentially, we are probably going to get back up to the 52 midpoint and then further up to the climactic bars high or open. Okay. Bears are trying to come down to 69.75, 40, 69.75, or 40.70. Let's just round it. So they're still selling. We just tested my alternative trend line. Since we don't have a lower wick on that body, we might break it and overshoot. 30 point is right there. But I don't like these bars. There's a micro wedge there. Market will want to initially test the 54 high and then breach above and go higher. But you cannot buy it until you see a strong bull close. These bears need to be bothered first. Okay, they're not bothered. They're still selling. It's still a small pullback bear trend. It's strong. It even broke down. Okay, well, let's say this is a breakout for bears. It's still strong. There's no reason to buy here. And I sure don't want to get out of my E-mini because that's making so much more than what I'm losing. And eventually when it starts to turn, I will take my profit there. I'm going to reverse with E-mini and I'm going to add to the losing contract and break even. So it's going to be a good trade, but it's still, bears are still telling us that this could still come down to 40.70 and there's no need to exit out. Bears and bull traps, how do they work? Well, if you are in any kind of, okay, let me examine. Any kind of trend so let me, how do I explain this to you? So any kind of trend, there's a trend right here. It's a bear trend, right? So we have a gap bar moved underneath EMA. Failed continuation, but we are separating from the EMA. But the problem here is that if this is too low, selling into some kind of a gap, no one's going to do that. So what you do is you wait. Okay, bulls try to buy once, they try to buy twice. You look for a double top. Okay, then you know these bulls are buying. Their stops are probably underneath 38. So if their stops are underneath 38 and you sell into it, that's your 1-to-1. Or let me do this. Okay, you put your stop there. That's your 1-to-1, 2-to-1, 3-to-1. Bears are trying to get the 4-to-1 target. Okay, so here This is always if you want, because it's a 1-to-1, it comes down, goes up, but suddenly we start to close below that 1-to-1, we're definitely going to get to 2-to-1. If we close below 2-to-1 with a bear body, expect 3-to-1. So it might still come down to 4-to-1 right there. There's a trap right there. You just have to you have to wait to see how many times bear tried to exit out. Bulls try to exit out if they were stuck up here. They try to buy, but they're not even able to get a break even. They're trying and they're trying. So it has to fail somewhere. You're looking for a double top. You need to see that double top. You see that double top? You can even sell underneath this bull bar if you wanted to. You just trail a stop order, sell stop order 43, and then you sell. Okay, so, or you can wait for bar 44, and then you can sell. Now for bulls, you have leg 1, pull back, leg 2, pull back, leg 3. Things are getting iffy, okay, right here. So what are we looking for? Too high. It is too high to buy, isn't it? If you're trying to buy here, okay, so if you're trying to buy here, where's your stop? Is this a good risk reward? If this is your, you're buying here, right? And this is your, I don't know, risk. Is this a good ratio to enter to go long? It may not go anywhere, right? So what are you going to do? You're going to look for a trap. What is the trap? Well, let these bulls try to buy and break out, okay, from these highs, okay? So then you're going to think of them as, okay, if I'm a bull, I bought this, even though this is my risk and I'm going for this much, okay? Where would be my stop? Is those bulls are going to put their stop here, right? And then they're going to probably trail. When you see, okay, at these highs, failure to break out, look at bar 32. It's a breakout bar, but no continuation. So there's a breakout failure. And then you get this inside bar 33. That's a sign that there's a breakout failure, bad follow through, and an inside bar. It's going to rotate. And then you get this 34. I kept writing this. I don't know if you guys paid any attention. And I kept saying, oh, yeah, this is either a double top or we're going to trap. But this neckline, there's stops waiting there. If the bears start to sell, and anybody who moved, because there's a breakout here. Bulls are showing you a breakout. That bar 31 body took out the prior high. So these unsuspecting bulls buying at the highs, okay, these are the new traders. They're going to take their stop and they're going to put their stop here because that high is taken out with a bull body. Market makers see that. They're like, oh, okay, let's run those stops and give them a scare. Hold on, I need to manage this trade because this bar is getting wedge, and if it closes bullish, they can buy it. Okay, so they not only run those stops. By the way, right before Tim Stout exit out, he talked about skunk stops. He mentioned it. He gave you a hint. Okay, so he gave you a hint, and he said there might be skunk stops. He talked about the stops being down here. That was around midday. None of this happened, but he was hinting you that this wedge could come down to that skunk stop, run those, and then reverse back up again because he had bullish targets to the upside. So one part worked, but the bears surprised us. And I'm sure when he saw the surprise bar, he probably started to, think maybe I need to abandon that, measured move target because this is a surprise bar. They're probably going to come down and run those stops. When you see 1, 2, 3, 4, 5 bars, and then suddenly bear bars are actually closing below EMA with a gap, okay, I bet, and if he's listening to me, he's probably not, but if he's listening to me, he'll probably going to say, oh, yeah, this is where exactly where I abandoned that, and I'm done. And he would actually look for a measured move to the downside. Once the bears take out the midpoint, double top, higher high, midpoint 26 with a bear body, bar 37, what you're going to do now, if you didn't sell underneath, you're going to look for a pullback. You're going to look for a up on this, down on this, okay? And then up again, down again, up again, that's double top, lower high, you can just sell. That's a bear flag. And that's what I was saying. We're making a bear flag, but I said I don't want to sell it because this area is support. I want to see what's going to happen. And I test the waters. I ended up buying there. I was committed to buy because I thought that we would actually reverse. That's the 50% or 33% pullback of this trading range. We might get a nice run. Maybe we could get above the EMA. EMA goes like this. We come back, maybe close somewhere at the EMA. That's it. This day can trade that way. There's a variation of that, but there are also other variations. So well, micro utterly failed. So something okay that I did there, okay, didn't produce anything. Once I saw that low was taken out, I immediately hit sell button on the E-mini because I know these guys are now trying to, they ran the stops. Here is your measured move. You can also go for a 2-to-1. Okay, so that's the 2-to-1 right there. Let me adjust that a little bit. Okay, so that's the 2-to-1. And we just tested it. We went one tick below 78.25 is now. Maybe we'll show up. I don't know. That bar didn't do anything. It's a tiny little body. You're buying against 1, 2, 3, 4, 5, 6, 7 bear bars. No one's going to buy above bar 57. So I'm still in this short. If the bulls somehow close this body last second, there's plenty of time here. On its side and bullish and outside up bar, then they can start to buy and I can exit this short. But this short is still trying to get to the 40 point. Or it already got the measured move, so it's bulls trapped down here. They trapped even more. They couldn't fix it. And nothing happened here because you got a gap now to the EMA, so it's coming down. They're looking for some kind of a bull bar so they can buy and maybe strong. Bulls could buy at the lows, maybe exit at the EMA, but it hasn't set up yet. So the bears are still pushing this. That's still 4-to-1 target right there. 40 point right here. I didn't exit. I wanted to see what the 57 was going to do. It didn't print an outside up bar, so there's no reversal there. Can't do much. You just have to wait. Bears are still making money. Okay, so for example here at the open, let's talk about that a little bit. You have a trading range open. Bar 1 is outside up, outside down. You know, kind of outside down, but it's a doji. Ended up going up. One point it was a bullish bar. Ended up closing here, so there were limit order sellers waiting. If the sellers are trying to sell this, that means they want to bring the market down here. All they're doing is they're selling the pullbacks. If bar 1 is proving to you that the bears are selling the pullbacks, they're probably going to get a couple of legs down. But you get the first 3 bars, first 2 bars overlapping. The second bar is bearish bar taking out to lows. Anybody who bought this underneath, 1 tick below, okay, or bought the close, you can't really do anything. They just sold the close. No one was buying there. They bought here. They expected continuation, and then this happened. Okay, so what are they going to do? This right here is support. So they're going to buy either in the support, maybe at the 50%, they're going to buy here, and they're going to break even somewhere in the middle if they're stuck up here. They buy somewhere here, maybe the close, and then they break even, they exit out. If there are no consecutive bull bars closing above that break even 50%, that means bulls are exiting, and this could actually come down and give you a measured move target. Okay, so that's exactly what happened there. But I'll explain that to you by measuring. So if you bought there, you're stuck there. Then you say you buy at the low of 3, okay, that's your measured move. Or you wait all the way down into somewhere here, even you bought here, eventually you actually exit out and then it comes down. So it opened here, went up, and then closed down. It gave everybody exit, and market comes out. So, right, so if you're here, sold, that's your 1-to-1 target right there. All right, so bears are still trying to get their 4-2-1 target. Well, because I measure this, and this is a strong bull, and it's a trading range, and I want to see if anyone at the low of the trading range wanting to buy. I have an account that can handle the micros. I can enter. I only entered with 1 micro. My losses are nothing. I sold it with E-mini. I'm still making money. I'm still short. Yes, I look like I'm losing, but soon I will be making money with that micro. You can, I explained it to you what you can do. You can exit out. You can literally reverse here. You do not have to hold on to this. And that's what I would recommend anyone not to hold on to it. I'm telling you what I'm doing because I want to be transparent on what I'm losing. Okay. But I made enough here that this is nothing. I don't even care. I can hit close and take loss, or I can wait for that bull bar. Okay. And then buy, because this is basically spike channel. Okay, so it's going to go to the 50% eventually, like that. It's going to go above the 50%. It's going to go to this upper trend line. And when it gets there, I will be actually possibly making money. Now, can they still sell this? What if this holds? What if this midline holds and we continue to come down? Because bears need a pullback and then continue to sell into the 4-2-1 and then the 40 point down here. Yes, they can still do that. What we need to see is, failure to break above this mid channel line. If the bears prevent bulls from closing a bull bar or opening a new bull bar, they can do that. Or what will happen is, it could go up, and then it could sell all the way down here. So everybody who are looking for, remember what I said, if you're looking to buy, they bought underneath this bar about 10 points. I don't know where that 10 points is. So I'm looking for 2 points. They bought it. Look, machine started to buy with the 57 because it's about 2 points. Look, 2 points. Now we're at the 5 points, okay? So bulls start to show. Now look at that bar. That's an outside up bar. There will be buyers wanting to buy and get the market up here. So this is where now bulls are going to load up, and they're going to try to see if they can actually get up here and break even. Because if you measure, if you bought here stuck, and if you buy maybe 1 tick above, right there. But if you were smart, and if you listen to Al Brooks enough, okay, that he tells you from starting 2 point, 5 point, 10 point, buyers are here scaling in. If you scaled in, then this is your break even. Okay, so this is where the bulls are coming in to get their break even who are stuck above 48. Okay, get it? So I'm going to get rid of this, clean this up a little bit. And as it gets there, there's sellers waiting, wanting to sell it back down here. But now, as we breach that 50%, bulls will be making even more money. And they might even buy the pullback, give us a double bottom, and a reversal back up. I don't know. Right now, everybody and their grandparents wants to break even, including myself, and I am about to do so. So that was a 5 point. Bulls jumped in, and they probably loaded up so much that they already broke even. They don't have to. Price doesn't need to go up here. They're going to buy. That's what, there's a whole, I posted the link, and I pinned it on my Discord. I even posted here. There's a whole presentation explaining this. So anybody who actually bought one and then they bought 3 more, they already broke even. They don't need to wait for this price to actually meet. But the bulls who entered above here, they're looking for a 2-point minimum. Okay, so 2 point, it has to go to 225, which we are there already. Okay, so look, that's a scalp. That's why we're stalling here. 225 scalp. But other bulls, they want 4 points. So they want price to go up to here. They want that. Can the market get there? I don't know. Right now, they're scalping because anybody who bought down here making money, and anybody who bought 1 tick above, outside up bar, I think it's an outside up bar, yeah. So they made 2 point and extra quarter, they're scalping. But other bulls, they want 10 points. So their 10 points is right there. So market is trying to get into this vicinity. As it goes higher, I'm about to break even myself. I already broke even. I'm just trying to make money. I also entered with E-mini, and I want to see if the bulls can close this body bullish enough that could get us to that 10 point, 9 point, 10 point area. So this is what I'm expecting for bulls to do. Climactic bar 52, midpoint is target. That midpoint is slightly above that 10 point mark. So we should be able to test at least the low of 52 and a little bit inside, maybe the close of 52. And that will be the 10 point bulls want to take profit, and the break even bulls is get a good entry exit price, average exit price without losing anything. I'd like to see continuation, but let's see if they can move this a little bit further. So do we have a 6 point? Yeah, so bulls closed a bar, moved the market more than 5 points, so we know they're making money. Now they closed the bar above 6 points, so we know they want their reward. So they want to move the market into that 9 to 10 point area. Anybody who bought above 59 wants a 4 point. So they also want market to get here. So somewhere here, there will be some profit taking at the minimum. Can we go higher? Yes. The climactic bar 52 and the gap is where bulls want to close, but they just have to do better here. Looking for, see if they can continue without collapsing. There's a little bit more room to the upside, around like 85, 50, 86 area, maybe even 87 for bulls. All right, so the first leg up, pullback is bulls might get their second leg because they did well. There's accelerated profit taking by bears, but many of them stuck underneath 58. They want a bear bar and they want market to come back here. So what if we collapse and we end up making a double bottom and then go up? Yeah, I mean, we need a double bottom to swing or some kind of a higher low. So these bears who are stuck here, they're looking for maybe a limit order sell. They already sold. They're looking for a break even. So they want that body to come down and test the 60 low. Okay, so, but if they do close a bear bar below 60 low, they can bring the market all the way to the 58 low or the 58 close. Bulls are trying to prevent that from happening. So if the bears actually tag the 60 low somehow, and this body suddenly closes on its side, and we get a next body bull, then we could get up here again. So there's a lot going on, because if you buy something here, so I'm disappointed because it's not going where I want it to go, and I exited out with my E-mini. So because this could collapse all the way down here. I already broke even with my stuck micro, so I'm all good, but I really wanted my E-mini to get up here. It could still do so. Look, this is where those bears are break even. Okay, so get rid of that. Let me do this again. If you sold here, if you sell again, that's a break even. But how would you know a break even could get follow through? That means they have to close that bear body underneath the 50%, that dashed blue line. If the bear is able to do that, then they can bring the market back down to here, even here. But if they cannot do that, that body closes up somewhere in the middle or further up, then this was nothing but a break even, and it's not going to come down, and we're going to continue to go higher. Okay, so these bulls, they know bears are trying to break even. There's a breakout, follow through, so there are a bunch of, there are a bunch of limit order sells here. Plus, this is probably a minor pullback because you're buying against it. But we have not tested this channel up, okay, this channel high. Well, maybe we did, I don't know. Nope, we haven't. And plus, there's a gap here. Bears are trying to prevent that gap from closing. So they're trying to sell, and they're trying to close that body as low as possible so they can bring the market back down here. What happens when the bulls cannot get to their 10-point? All they get is a more than 6-point run, and nothing is testing, nothing from 9-point to 10-point testing. We can end up selling and swinging that down all the way to 40 points, so be aware there, okay? So when market moves 6 points and it wants its 10-point, but you're buying against a strong bear pressure, and it never gets to its 10-point target first swing, there is no swing by bulls. This was nothing but a break-even event, and you can see now the bears stuck here, didn't want to exit out. They're selling at the high, and now they want a new low. They want this low to take out the 58 and 59 low, and then continue to come down to the 40-point. So this is where you have to make that decision. You have an outside down bar now. If you're still long, you exit out. You don't linger. You don't sit there. Okay, so you don't expect bulls to try to give you a 10-point. It's not happening. And bulls, everybody who bought above this outside up bar, I measured that 4-point. Did they get their 4-point? No. If they cannot get their 4-point, that means they're not going to go higher. So what now? Bears can continue to resume this bear trend all the way down here, and they probably will do that. Bulls want a double bottom. Okay, so this completely failed. I'm out of this. This right here broke that. This channel, they didn't really test the channel high, but to me that's okay. Now, bears need to take out that low and keep selling. If they do that, then they're going to keep selling. If they fail, suddenly we get bull bars. We've got a double bottom neckline. Can the bulls still show up and get to that 10-point? I know it doesn't look like it, but we'll see. We're trying to take out that low. It's almost there. Anybody who loaded up above this, they might get a chance to exit. If they haven't exit out, now they're gonna be forced to exit out, minimize their losses, or they're gonna wait for another move down to the 40-point. But the problem with this 40-point, it can get another 10-point. It can get another 20-point. It could keep going on and on and on into these levels, okay, and never actually reverse back up until the end of the day. Okay, so just be careful there. All right, so anybody who were stuck here, these bears are now making money, and some of them might be exiting out, and that's why it's actually moving up. But if this bar closes on its low, we might still continue into here. Can we trap the bears and go higher? I mean, there's no bull bar, so I don't know. They have to show me some kind of a bull bar closing on its side for me to believe that this is going to reverse. Right now, it's resuming the bear trend because bulls completely failed here with the 59 and 60. Yeah, market is down, up, failed to break out, down again, okay? So it's, you can see once we move underneath EMA with these bare bodies and we're gapping down, look, you have is bar 44 to bar 55, okay? That's 10 bars. Bar 64 is going to be 20 bars. So by the time 64, we could find ourselves down here and then reversing back to the EMA. That's a 20 bar gap to the EMA. Sellers will be at the EMA. So this could still continue to sell down to here. And you could just, could be stuck in this. Don't do that. This is still selling. I tested the waters and it failed. And I made money selling. It's always in short. But you have to keep consideration where the buyers are. They were buying underneath these lows and making money. They're probably going to buy underneath 12. So the 5 point underneath, they bought. They might buy again. Well, we now took out the 59 low and it closed a strong bear body. Is there a wedge there? So let's see. 1, pull back. 2, pull back. Could this be a third push leg? Well, there's no bull bar yet, so it could still continue to come down. And the third leg could extend all the way down here. So 4070 is still the 40-point target. But if we start to see bull bars, okay, this is an inside bar now. Stronger it closes, we can get that third push, or just trying to see, or maybe wedge here. 1, 2, 3, 1, 2, and 3. And if we get a strong bull close, then suddenly bulls could show up above 63, because 62, even though it's a breakout, but the body did not close below 59 low. It's still bearish. It's still trying to sell. So if you're still selling, hold on to it. Or if you sold underneath, okay, 61 is, you can still hold on to it until you see a bull bar. And your target is still 4070. So always in short, you just sell. You look for a rally, maybe 1 leg, 2 leg, and then you sell. Okay, they sold again. They sold again. Selling. First, second, they sold again. So the bulls are not making any money here. Anybody who try to break even, they got their chance or reduce their losses, exit out. And then I proved to you that 10 point, we couldn't even get to the 10 point. We couldn't even close the gap. So the gap is still open. So this is still bearish. So the bears are still pushing this to the new lows. And the target is still 4070. Okay, so let's see if they can make this down. When can this actually fail and finally start to go high? I need to see a bull bar just about now. And I need to see bulls actually start to take out the lower high 60s. Since here, we have not taken out any lower highs. So market is making lower highs and lower lows, and it's kept drifting towards the 40 point. Target's still 4070. Let's see if they can get there. We will go right back up to that climactic bar 52. When the bulls show up, if they show up, they have a potential of actually closing that gap above, which is the body gap of 52. But it's going to be difficult because this can continue to sell another 10 points underneath 4070. Actually closing that gap above, which is the body gap of 52. But it's going to be difficult because this can continue to sell another 10 points underneath 40.70. Nothing to buy here, as I'm looking to see if there's any kind of support nearby. The nearest support is about 2.5 points below 40.70, so around maybe 40.67, 40.65 area. So there's this projected target line, and we could actually breach that and continue to sell. Here's your measured move target on the hourly I marked for you, 74.50, and we did we just test that? Yeah, it is. We tested these hourly measured move target. We're testing now the support, but we could go a little bit lower maybe. 40 point is right there. Still no bull bars. It's sell to close. Sometime around 3 o'clock, we're probably going to get some kind of a reversal. Remember, I said we're going to get some kind of either a reversal or some kind of a swing around bar 48.50. So if I jumped in bullish because I know sometimes it sets up like that, and this is possibly maybe a wedge bull flag. The market proved to me that nope, we're always in short. If you sell, you'll make more money. So when we get that, now there is your swing right there. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, maybe another 16 to 18 bars. Okay, we get hour and a half, a swing. But we will reverse, and that could be around 3 o'clock, which we're getting closer to it. So there's not much left there. Let's see what happens at the 40 point. We should test that 40 point. What if we just don't test the 40 point and it suddenly reverses? Well, we have a reason for it because we're testing a support area, but the hourly bar is still very bearish. We're testing the prior hourly bars low, which was a bear bar. We're also testing the important price, which is March 22nd high. So we know we might bounce from here, even if we actually breach below that. Now the channel, anybody, if you can change the channel, the way you're measuring. So it kind of sold, right? So it didn't touch the top, but like a 5% inside and 5% outside, that's still a sell zone. You're just trying to break this channel line if you're trading with channels. So I'm just waiting for market to come down and get their big swing reward. You could have sold underneath the outside down bar 61, and that would have been a good swing. That could have given you, let's see, yeah, 10 point. That would have given you a 10 point right there. So the bears who sold underneath 61, measured from the top of 61, they're basically scalping right here at 10 point, but they don't need to stop. It could still sell, but I think we're going to go right back up somewhere here. We're testing the important price. It'd be better if they can come down and claim this 40 point, but at this point, anybody who entered here got a 10 point. They're going to pay themselves. Where can we pull back? I still think that the market is going to want to get back up to the 52 and test the upper 1/3 of 52. So if you get a good reversal, 2-bar reversal combo, like trapping the bears and then closing the bar 64 on its high, bullishing up, bulls can buy. But that bar hasn't closed. There's still half a minute. But eventually, market is probably going to want to get back up to here. I don't know if they can do it today. Well, we'll see. But since it's a gap bar, I'm going to measure the entire body 50%. So they're probably going to want to get back up here, or at least the bar 60 low. Bar 60 low, bar 60 mid, or bar 60 high. We will eventually get there, but there's no bull bar. 40 point hasn't met. So if you're still selling, you can continue to sell. But if you start to see bull bars closing, then you can exit out. Still nothing, still no bulls. So bears are making money. We're about to test this wedge line. Bears can still accelerate and come all the way down here. This one's done. Now, where's the 10 point? There are probably buyers, limit buyers, waiting to buy here around 10 point and bring the price back up. Because anybody who bought underneath 12, as price goes higher, they will be making money. There's no bull bar, so you can't really buy. You have to wait. We have not tested 40.70. We came so close to it, but we have not touched it yet. Some of the bears scalped at the 10 point. They might be looking for a continuation into 40.70.50 area or 40.70 area, not too tick area, 70.50.70. So you can't buy it, you just have to let it go. I mean, Testo 22 March high, we've been saying that for days now, maybe 2 weeks. I don't know. You can go read Brad's blogs. Is pretty much all of us mentioned it since this morning. Pre-market, even Tim said that if the bears start to sell this and they fail at these highs, we're going to swing, and there's your swing. They've been selling this since the midday. So I would assume 40.70 is what they want to test. It is a very strong small pullback bear trend, but it is also parabolic. Okay, it's very steady, but these gap bars make it very parabolic. So there's also leg 1 pullback, leg 2 pullback, leg 3. So when we start to pull back, this is going to be the target. Market will eventually start to pull back to here first. So let's say around 40.80. If they can get above it, then 40.84.50-ish will be their target. But first, here's a 10 point. Here's a 40 point. We should test this area. And eventually we will pull back to here, somewhere in this line. As we pull back, it could be around here. We might even pull back to here. We might even pull back to here. I don't know. I'm more interested in this projected line. Bear market. It was a bear market since the open. But look what's happening. Is this 200 EMA or 1 hour EMA, it's descending. It's pretty parabolic on the hourly. We're going to have a pullback. But it is kind of descending, but in order for us to start pulling back to it, this has to flatten. And in order for that to flatten, we need to start to print bull bars. When the bull bars start to get above the EMA, they're going to probably buy. And as this gets slower, slows down or gets slower, We're going to go test it, but there are sellers waiting. So right now is no bull bars, still going. Bears is steadily selling. Small pullback bear trend is the strongest bear trend of all. It will keep going, keep going, and keep going. Bears is steadily selling. Small pullback bear trend is the strongest bear trend of all. It will keep going, and keep going. Okay, so it's almost 3 o'clock. There's less than 5 minutes left. Reversal might be coming soon. There's still room. We might still pull down to 67.50. So, or if we start to see an outside up bar suddenly showing up, you got a wedge here. 1 is 2 and 3. You look for an outside up bar is maybe a couple of bull bars, and then you look for a second entry long, and that could get us to here, and then furthermore up to here, maybe even here, but I don't know. There's plenty of time left in the day for a decent 10, maybe 15-point reversal, but it hasn't set up yet. 78.25 or 40.78 is the first target, so the 4 points above. But again, you can't really buy without a good bull bar, and you're buying against a 5 bear bar channel here, but it's exhausted, right? You know, it's still going to be challenged, just like any of these, but buyers started to show up. We kind of know they are fine. Look at these 2 bars. Look at these 2 bars. We didn't even have anything decent here. So now this could be a sign this bear trend might be coming to an end. Bulls need an outside up bar, and they need to take out some bar 64 high. Stops probably lower there, okay, because it's like a pullback in a way. It's some pullback and another leg down. It's a doji. But these bars, especially 63, look at body closing, taking out that 59 low. That's a breakout follow through. So they're going to put the stop there as we make new lows. Bulls need to take out that stop. Once they take out that stop area, they can do a pullback and a second entry long. But I don't know when that's going to set up. We just don't even have a good bull bar yet. Everyone's waiting for 3 o'clock. So 30 more seconds left. Sellers probably above 65 and 64, above 64. Limit sellers disappointed if they see a bull bar. Disappointed, they're going to try to first sell around here, here, maybe here. But if the bulls start to get those bull bars stacking like this, it's not an outside up bar. It's high. It's not higher than the prior bar 65's high, but it is a really decent close. Now, there might be some stop orders waiting now above, stacked above 66, but you need to see bulls actually showing up here. Now, if you buy above 66, you're going against this strong channel. So they're going to try to reverse it, get back down, and test the lows. They're already challenging these bulls. The first bull bar they see, they're trying to sell. Now, it looks like selling right now, but be prepared. If the bears cannot take out the 66 low and we suddenly get some kind of a micro double bottom, that's all bulls need, micro double bottom. Testing, making a micro double bottom and then closing another bull bar could bring many bulls back in the market very fast, like that. So they're bears, machines selling the first bull bars they see. Their goal is to take out the 66 low and continue to sell into my original target area. Is 10 point. Limit bulls are living here. They will look to buy. 40 point bears are living here. These bears will probably want to take profit. So you can't really buy against a strong bear channel with 5 bars and gaps. But 67 did not go above 66. So because it's a good close, there might be already stop order bulls started to drop those orders 1 tick above 66. Look what just happened there. If the bulls close this body is bullish on its high, better if it closes bullish. That is a micro inverse head and shoulders, 65 low, 66 head, and a possible 67. But now if it takes out 66 low, that's done. It's going to come down. But you see, is that going to be a micro double bottom that I talked about, and finally they're going to reverse, or is it going to take out the 66 and we come down? Oh, we just took out. All right, we're still bearish. So we just took that out. So if you're going to buy, don't buy the close against this. They're going to slap that bull bar, and it's going to keep coming down. But if you really want to buy, and you're looking for a backdoor, put a buy stop order 1 tick above, or 2 ticks above. I don't care, but not at the high. As the market finally turns, then you enter and you start to make money. So we're still trying to get that 40 point. We're going to pull back up here, and then we're going to pull back up here. Most likely we will get up here, but it hasn't set up yet. All right, so it's 3 o'clock. If there are any bulls looking to enter, they're looking to trap the bears. There is a 50 SMA there. Market might be looking to test that before bouncing. Remember, I said 40, 67, 50, 40, 67. We could still drift. 40, 66 is right there. Also, the moving average is, we might actually test it before reversing back up. I'm more interested in the 40 point. So that's 40.70 is targets, or 40.69.75 for ES, E-mini. For micro, it's 40.70. Really nice trend, really nice swing, but it's getting a little bit iffy here. You see, bear bar, bull bar, bear bar. Are they going to be able to close this bullish? I don't know. If you're selling, you're still selling. The reason why you're getting this, because market reached the 10 point, and you know machines are waiting below that prior low. 2 point, we already saw the 2 point bulls did show up. We saw the 5 point bulls show up. 2 points bought this. 5 points bought that. This is the 10 point machines are entering. When can this start to go higher? If we get that is outside up bar, taking out that strong bear bar, 67 is, and then you want to see bulls taking out the 64 high. If bulls can do that, then yes, we can go higher. But if they cannot do that, then it could come down another 10 points. I expect bulls finally start to show up, but this bar is young. It needs to show us a outside up bar. Right now it's a strong bull bar, but it's only been a minute or 2 minutes. But if the bar closes above 67 high, then we can finally get something, some kind of a reversal into that trend line. Now, remember what I said, it's a 20 bar gap, okay? And I said somewhere around 64, we're going to get that 20. This is 20 plus bar gap. So we will pull back to the EMA. We will get back to that EMA. We might even get above the EMA. But there are sellers waiting at the EMA because it's a 20 plus bar. They have been selling. And there are no bulls still in the market. E-mini has not reached the 40 points, so it may want to reach that before even reversing in the market. E-mini has not reached the 40 points, so it may want to reach that before even reversing. On the hourly, we still have room to 67.50 or 67 area. Daily, we have the EMA, and then is my trend line here. Let's see if we can actually tag it. S&P literally tagged the 40-point zone. If you actually measure, yeah, I'm right. So I said 40.70 is the 40, 40.71 is the 39. So if you were in micros and you kept swinging this 40 points, those bears might start to take profit here. But they have to close a bull bar to accelerate the profit taking. Bears will look to see a strong bull bar closing on its side. Better if it takes out the prior bear bar's high. Then they would exit out above that bull bar. I'm repeating again, their goal is to, I keep repeating the same thing. The reason why I'm doing that, because people is maybe showing up late, and I'm trying to brainwash you at the same time. So I don't mind repeating. I'm getting tired. Believe me, I don't want to, but that's the only way you're going to learn. Bar 68 is not an outside up bar, but it closed on its high, and now bars are alternating since 65. So that means bears are losing momentum. Target is the upper 1/3 of bar 64. There are probably limit sellers waiting there because look, breakout, follow through, pause, somewhere there is we're going to pull back. But this is where probably the stops are tightened or above 66. If the bulls start to take out those stops, we can demolish this, but I'm sure there are some sellers waiting. Bulls want to get to this trend line and eventually get up to here, 84.50. So let's see if there are any sellers at the upper 1/3 of bar 64 or the low of 59. All right, so we're testing that area. It's probably going to want to come down, see? But we should test the 59 low. Okay, so we're testing that. Now we're testing inside. Let's see if there are any limit sellers. They will try to sell, but we're gaining momentum now. Bulls want to test 10 point above 40.81 is their target. This is their target, so they're trying to reach there. They need to demolish. Okay, so they're running stops. I don't care about this anymore. Done. It's going to come down a little bit. It's just that it's taking out the stops. It could turn that resistance into support any second. When they breach where the limit order sellers and those limit orders selling but not making any money, they will exit out quickly if they realize that, wait a minute, we're trying to stop something here that may not actually stop and go to 10 points. So we're probably going to reach that 10 points or this trend line. And we might break the trend line, and this would be my actual target, 84.50. So let's see if the bulls can do this. They have to close this bull bar above 64 high. If they do that, next pullback could create a second leg up. Bulls could use this area as support and could get up to 84.50, even higher. All right, so let's see. There's still sellers there because it's a limit order is market and it's the high. Okay, so they're trying to sell. But if the bar closes on its side, those bears will be disappointed and they're going to probably wait until price gets up here and then they're going to try to sell. So the market is probably trying to get to 81, 40.81. But this bar has to close bullish, not with a long upper wick. Because if the bulls fail, okay, let me see. If the bulls fail to close this bull body as high as possible, like somewhere here, they're never going to reach here. It's going to be the same thing that happened here, that the 10-point move failed. So yeah, if you measure from here, we need that 6 point. They already scalped 5 point, 5.525. They even breached it. But now these bulls scalping 5 points. See, that failed. But can they get the third bar? But this is not a good sign. Now everybody's looking to see if this is a pullback and they can get the second leg up into the 10 point. Bulls can still close above here, but I don't like it when the second bar fails like that. But it's still a really nice breakout. Okay, so this is a breakout bar. It's a pullback. We could still get the bulls eventually, but that bar should have closed above 6 point. Limit order bears sold. They want to close a bear bar and because they want to get back down to the 67 low. They're stuck there. In fact, they want to sell another 10, 20 points down. But if they break even, sorry. If they break even, selling that. Okay, so they're at the break even. If they break even, not sell anymore, okay, then we could go up to that 10 point. So this is do or die for bulls. If they want their second leg up, they need to prevent this bar closing below that blue dash line, break even point. And they should prevent for bears to coming down to the bar 67 low. But you see how the limit bears showed up where I said that they would, even though they breached, but look what happened. They could not close a bull body above it, so it's now there's more selling. So that was still a valid area for bears. It's still a bear market, but it is looking for probably some kind of a double bottom to get back up here. But the moment we take out that 68 low, I will be no more interested in any of this. So you can mark your own chart. You kind of figured it out. And another reason why we're coming down because bears really didn't test their 40 point on the E-mini. But you can see that this was bulls buying. And at the 10 point, look what happened. This bar did not go test the 12 low. So maybe this was just a break even, not be able to, but we need to be able to test that. And you can see how bearish the market, it's not even allowing bulls to get back up to these prior lows. So these bulls are still not making, but they're accumulating. Anybody got upset, sold with a limit order. Either they're trying to break even with their original price that they sold, or where they were stuck so they won't lose any money. They really want the market to come down here. Now, there's still less than a minute left. If the bears take out that low, we could continue to come down. Yeah. If we fail to take out the low and not be able to close below this level, the last second, this bar has to go up, but it doesn't look like it wants to go up. That's because of that 40 point that we left behind. And 67.50, 67.75 is still target. They could still breach further down. That's it. Bears won this. It came to their 67 low. Well, the bulls showed you once again that this is an attempt to have a counter trend, but it failed. It shows you that the bears are still in this trend, and no counter trend is starting. All they're doing is scalping. If the bulls are scalping only, point counting proves to you that the prevailing trend is a strong trend and it wants to come back and test the lows one more time until it no longer can. And you can see that they have a 40 point and they're still trying to come down to it. So you can use it for your advantage to see the conditions, and if the counter trends are turning into a swing after a certain amount of points are being taken out, scalped. If a certain amount of points are being scalped, but bulls are not able to close, which I proved it to you with that 6 point area. So you know that there's no counter trend, and you cannot just buy heavily, expect price to get to somewhere. Either use it for your advantage or don't. I don't really care. You could just, trade whatever makes sense to you. Can the swing bulls start to show up here? They're going to have to undo what bar 70 did. Now, what do you see is happening here? Bar 70 did not move underneath 67 low. But the follow-through bar is, 71 did. If 71 now closes on its side, we've got a one-tick trap and a double bottom neckline. Bulls want to take out that neckline. So if this sell fails and the bulls actually close a bull bar, stops are above 69. So the bulls need to run those stops to get to these highs. It starts with closing a strong bull bar. So first the bears need to get out of the market, but they might be looking for a bull bar first, right? So if they don't see it, they will not exit out. If 71 closes in 45 seconds on its side, some bears will be inclined to exit out. But if it doesn't, then we just make new lows and get to that 40 point before we even reverse. Without closing above 40, 77, 75, bulls will do nothing. They will not be able to go higher. They will not be able to reverse. So we're making new lows. Okay, so now all these bears stuck underneath 67, making money. Bulls need to close a bull bar is just around 76, 75. 76, 75 or 77 to be able to get to 40, 81 area or 80, 75, or test of bar 60 low. bulls will probably try to get to the bar 60 low, but the first target is this trend line. They need a bull body. They need some kind of a signal or a second entry. So now bar 72 is a trap, but the bulls need to close this bar bullish. Take out the stops above 69. If they can take out the stops above 69, then they will get to their target around 81, 40, 81. And they don't have to stop there. They can get to 40, 85, 84, 75, or 85. Okay, so trend line is the target, but we already have an outside up bar now. They just need to close this bar as high as possible to start reversing. It's not accelerating. It's a 20-bar gap, so it's trying to get to the EMA. There are probably sellers waiting at the EMA. So I like to see a pullback to EMA at the minimum, and then breach that neckline and get to the 60 low, which is this. I'm going to get rid of this. This is no more. So I like to see these bulls close a bar around 40, 76, 75, or 77. There's a wedge. 10-point bulls still might be entering. There's micro wedge, smaller wedge. Bulls need a second entry long. They might have already gotten above is 71. It's an outside up bar. It's a nice bar. Better if that body closes one tick above 71. Then the neckline will be target. That's it. So bears will probably going to exit out, most likely. But there's still this area, still resistance. Okay? So it's still not easy for bulls to undo any of this. Bears still want to come down. They didn't get their 40 point. It's a limit order market, so they will try to sell, but it's an outside up bar. And bulls who bought one tick above 72 already entered long. So they want to make money. We will know if the bulls are serious about this. If I see 40.77 breach with a bull body, then expect 40.81 test or 80.75 test, possibly 84.75 or 85 test. But are they making any money buying above bars? They sure didn't much here. Are they going to make money here? I don't know. It's right now sideways, and it's trying to go up. It should have accelerated already. If there are any bulls here, they need to accelerate this. I didn't buy above 72 because it is, even though it's a second entry, it's just the market made a new low here. You're in a trading range, and it's testing the trading range highs. My only problem here is this 40 point. And this is resistance. Okay. I'll connect those. Wicks 70 and 69. I need to see a second bull bar. If I see bulls close another bull bar, then I'll be more excited about bears taking profit. There's no acceleration, meaning no one's wanting to take profit. So the bears are still sitting here like, I think we're just maybe scalp and see if anybody's coming in. Still nothing. Still a bear trend. Still selling. Okay, last 27 minutes. Either market is going to continue to sell or it's going to finally reverse, okay? We need a higher low. We already have a wedge, another wedge, okay? Maybe a truncated wedge, but we need a higher low. Well, if that bar takes out the 72 low, then there is no higher low. It ends up becoming a outside. You got an inside, and if you get an OO, it's a breakout mode. Yeah, we might actually end up going sideways, but I would assume bulls are going to want to try to get back to this EMA. The reason why we would do that, it's because this makes it difficult. This move up, okay, makes it difficult for keep selling this into end of day. Down, up, strong, and we even made a new high there. Yes, it's still a swing, but eventually we will reverse. It's just that we might close at the EMA, or we're going to get above the EMA and we're going to get up here somewhere and we're going to close there. Here's your 40 point. Okay, so this is a new low, but they're trying to sell. This isn't an outside bar. It didn't close as outside. It didn't go one tick below 72. But it is a strong bear close, so it gapped down. It's still trying to get to the 40 point. Okay, so let's see. Bears can actually get that. That's it. So, all right, bears came for the 40 point. Good for them. Now is a good time for them to actually take profit and bounce us to this trend line if they can make it. Or we're just going to keep selling. There's room to 67.50 area. But 40 point is a big item. There's not much time left in the day. We have to snap back to EMA because it's been 20 points. It's been more than 20 bars. Market has been selling without touching the EMA. It's either going to go test the EMA and close at or under the EMA today, but it's probably going to get back to the EMA. I don't know. I don't know if we're going back up. We could sell another 10 points. There's still plenty of time for market to do that. We're just at the 40 point, which is big reward. And market could bounce a little bit. Or it's just going to keep selling. But since it's been more than 20 bars, it's a good time to get back up to EMA. It's probably waiting for Meta news, which is coming up right after the close at 4 o'clock. Okay, so that's gonna move. That's gonna move the market. I don't know if it's just like yesterday. This was the alphabet. Okay, look, we sold. We're too low. It would be better if we can actually pull back, and if the Meta news comes bad, we could sell again. But it would be better if the market actually can pull back to EMA, some average price, you know. All right, so bears have a reason now to pay themselves. 40 point is a big deal. It's a trend, profit taking. Meta hasn't come out yet, right? So they didn't release anything during the day. Have I missed it? Or is it still scheduled after hours? I thought it was scheduled after hours. No acceleration, no nothing. But 74, some bulls started to buy above it, or bears already started to scalp. They just need a confirmation bull bar. So they need another bar bullish and possibly the third bar. Otherwise, it's just no one's going to enter. Still trying to push to 67 area, but I'm going to look to see what will happen here with the second bar 75. Now, institutional traders start coming in bar 77, but market is on close imbalance. So it could bring us back up to at least the 75. See if the market can get there. Or furthermore up to, let's see, 79.50 maybe, if bulls are lucky. But nothing. No acceleration. No one's coming in to buy. A little bit more room to downside, 67.50. Unless we get a bull bar. Yeah, let's see if market could get us back to 85. I think we might end up going to 85. But now is the time to bulls to show up. Okay, there's what seems like a micro double bottom, 74.75 right now, but there's plenty of time for bears to take out that 74 low because there is room to the downside. They need to trap the bears. I'm going to end the session a couple of minutes before the close because if you guys want to jump in and watch Brad go through the end of day session. Tomorrow I will be in the morning and afternoon, no one's scheduled. And then the Friday I will be in the morning and the Brad will come in the afternoon. Well, 40 point was the ticket. So point counting works. We know why they're here. Bears wanted that 40 point. They've been swinging since midday. Okay, so we now have a 20 plus bars gapping from the EMA. We are due to snap back to the EMA, but there are sellers probably waiting at the EMA. If market wants to sell, average price is where it would want to sell if this is too low to sell. All right, micro double bottom 74.75. I don't even want to say anything because every time I wait for bulls, but there's a nice wedge there, and micro double bottom and a higher low would be ideal for bulls to get us up to here and to neckline. And if we break this resistance, that means we're breaking this trend line. We could get up to the 84.50. Sellers also waiting here. Okay, so we could end up going all the way up here, but I would assume we're going to test the bar 60 if the bulls can accelerate. And that could be maybe with that meta news coming up at 4 o'clock or whenever it's scheduled. So I need acceleration. All right, let's go. Either sell or accelerate. No one's accelerating. But it's going to trap the bear soon. Might be still trying to get to the 67.50. This is bar 76. Be careful here. Either bears are going to sell another 10 point or just 5 extra points and then reverse. Or they're going to show up here with a 1 tick higher low. And then we're going to start accelerating into that 81, maybe trying to calculate here. Yeah, bulls need to accelerate into 75.50 or 75.50, 75, 70, 75, close a bull bar. They can then accelerate into 79.50. If they get above it, they could get us to all the way to 83.50. All right, so that would be nice, but where is the acceleration? That seems to be a nice bar, but again, every time I say this might be the bar, but you can see there's some kind of a, momentum loss here. But without getting any kind of decent bull bar, it's difficult to buy. 40 point is holding at the moment. I'm trying not to, but no acceleration, no nothing. And we know there are sellers waiting at the EMA. They might want to sell another 10 points, maybe even 20 points, who knows? That trend line is the target. The moment we get above trend line, we will take out this, okay, neckline. And if we do take that out, we could accelerate up to here. Yeah, that's not acceleration. You see what just happened there? They're coming down is to that 67.50. That is right there. Bar 77 is the institutional bar. And that bar, it does weird things. This bar and the next bar, next 3-4 bars, they need to trap the bears, I said earlier. So they might look like selling and then suddenly trap and go higher. So it did breach that micro double bottom 74 and 75. If this is a trap, sure, I'll take it. But close a bull bar. Give us a second bull bar or something. Last 10 minutes into close. The link to Brad's session is posted on their All Things Trading channel. You can get it from there. Oh my goodness. So I guess we're going to close somewhere around EMA or maybe above. I prefer is this area to be tested, and if they're going to sell it, at least test here and then sell. But I think if we close above this trend line, this is where we're going to go. This is my target. 84.50, it might even accelerate to here. But I think this area is going to be where market could bring us up to, even after hours with the meta news, depending on how they do. But I assume that they did well. Last one was okay. So, yeah. We need a bull close above 74.75. If we get that 74.75, then the 10 point is going to be your target. Okay, so let's see if the bulls can take us there. We should be able to get there. And we don't have to stop there. We could go higher. But we need that second bull bar. That's it. That's it. This is what we need. Here we go. Okay, we're right there. If we close this bar bullish, we might accelerate. Go, 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 go. Don't give up. Can't stop believing. We're almost there. Oh, I'm making money. Excellent. my target just met. Woohoo! What? All right, so 10 point. I scalped there like there's no tomorrow. It might still go higher, by the way. All right, so I mean, this really tired me, guys. I think I'm just gonna hit the couch like head first after this session, and I'm gonna call my housekeeper, my non-existing imaginary housekeeper, to mix me something, because this was tiring. I mean, it was nice, but it was just tiring. Oh my gosh. Someday I will hire someone to just mix me a drink. That's going to be their job. What do they call them? No, I don't have a husband, but I don't need a husband. I need someone to know how to mix a drink. That's what I need. Because this was very tiring, but it worked. So you could have bought above 76 because you got a double bottom there. And then I said, we need a higher low. So that 76, a higher low and a really nice close. That's your second entry long, is first entry, second entry, okay? Then here's your second entry, actually. Hello, dipped. I said, well, if we're not going to go to 67.50, we need to trap these bears. Remember, I said it twice. I said, we need to trap the bears. There we have it. So where are we going? We're going probably to the 15-point, the 14-point area. So 14-point average there, 15-point there. But my target is this right there. So we're going to keep going. Good job, bulls. Okay, Buck, simmer down. Okay, everybody, this is great. Oh, mix it. Yes, that's what I'm. Thank you, Successful Luck. I really appreciate that. That's what I was trying to say. Exactly. That's what I need. Someone to be on payroll and do just that all day long. Mix me a fresh squeezed lemon juice. Make sure there's ice in there. All right, I have to end the session because you can jump in and listen to Brad, which is what I'm going to do. So let's head on over to All Things Trading. Link is right there. So let me click on that. He hasn't started yet. He's probably waiting for me to wrap things or get going. I just wanted to see what they're going to do. They're taking profit at the 10-point right now, which I said that we would be testing above this neckline. We need bulls to close that body here. If we close a body 1175, then expect 15-point to be tested. But they're paying themselves because, why are they paying themselves? Because we have been 20 plus bars gapping away from the EMA. First touch the EMA, even if we get above the EMA, there's a chance that sellers are waiting to sell. So, and I said it's an average price if market, but I don't want to go against, okay, inside, outside, you know, and a breakout. I don't want to go against this. So I'm going to wait for this bar to close. If this bar closes as high as possible, and even the next bar actually goes above 1175, we're going to find ourselves very quickly right there. Okay, so we might just go right there. Bar 60, I said bar 60 low is target, which we have not yet tested. So we'll probably will test it. Okay. They are just taking profit. What if it sells? Well, we need a double top at the EMA or above the EMA. So what could happen is that, where's my marker? What could happen is either this is going to sell quickly or the next bar is going to go and make a double top and then sell. But needless to say, I actually said it several times. If market is going to sell, it's probably going to sell at the average. So it has to pull back the average. So we did pull back the average. I did scalp that 10-point very quickly. We did not close above 1175. This doesn't look so good. Market just ran out of time. I'm waiting for Meta just in case. Brad hasn't started yet. So I'm going to hang on here until he begins, but you're more than welcome to sign off and jump on to the YouTube. Okay? Yeah, so I'm just curious about Meta is because if we fill this upper wick and close a bull bar, we're going up here. We might even go up here. We might get a 20 point out of this. I can squeeze out a 20 point out of this. That would be so cool, but I am flat at the moment. If I'm going to buy this, the problem here is that it ran out of time. I don't like to trade after hours. I'm just right now for entertainment value, okay, wanting to see if we're going to get to this, number one, and it's possible that we might even go 20 points. Okay, so it's just an entertainment value at the moment. So you guys have a great day. See you guys tomorrow at 9 a.m. sharp. Okay, let's go watch Brad and what he has to say. He's going to do bar by bar reading of the entire day. He'll probably correct me and Tim, and he'll straighten up everybody. So I'll see you guys tomorrow morning. Bye, everyone.